So since we are done with revising the chapter nature, objective and scope of audit, the next chapter which we are going to take up for revision is going to be audit reporting chapter, one of the most important chapter from the examination perspective. The weightage also will be very high when you look from exams. Even in the previous attempts also they have asked a lot of questions from this particular chapter, audit reporting. And one more good thing about this chapter is it's going to be very practical. It's not just going to be completely theoretical, it is very practical chapter. So it will help you even in the examinations, and it is going to help you out even after your examination, like especially when you practically start doing the audit, then this chapter will even help you at that point of time. See, earlier, if you are a person, if you are a student who has already given your attempt under old scheme, there used to be a chapter called company audit earlier. At our CA inter level, there used to be a chapter company audit, but under new scheme, under audit, they have removed this company audit chapter. But this company audit chapter is still there in your law paper. In your CA inter law, the company audit chapter is still there. But from audit, it has been excluded. So why I am telling you this is, even though the chapter company audit has been removed, even though the chapter company audit has been removed from audit, but it is still continuing in the law paper. There might be some interconnected questions with relating to company audit related chapter in the auditing paper. So even though officially they have removed this company audit chapter from audit, it's still there in your law paper. So they might ask some interconnected questions relating to company audit chapter in the subject auditing and ethics. So my suggestion will be, it will be better if you watch the revision video relating to company audit. So you need not go anywhere else to find that revision video of the company audit chapter. In my YouTube channel itself, you will be able to find a chapter, a dedicated video revising the important provisions relating to company audit. Please do watch that also once, because I don't want you to take the chance. If they ask you any interconnected questions relating to company audit, you should be in a position to answer it. So that's why I will even add the link in the description of this video, where you will be able to access that company audit related revision video which I have uploaded long ago, so that you watch it once before you go for examination, to be on a safer side, to be able to answer the question in case if any interconnected questions gets tested. Clear? Right. So having said that, now I am coming to the topic. Now we will start revising the content of the chapter audit reporting. Sir, what exactly we are going to revise in this chapter? What exactly we are going to learn in this chapter? See, as we all know, the auditor's ultimate objective is to express an opinion. And when I say auditor has to express an opinion, I have told you multiple times, the auditor will not just come and say his opinion orally. So auditor will express his opinion in the form of a written document. That written document which contains the auditor's opinion, that we are going to call it as audit report. So when I say audit report, it is nothing but a written document through which auditor is going to express an opinion. So how to prepare the audit report, sir? Can every auditor prepare the audit report as per his own wish? No. Even for preparation of audit report also, there are guidelines. There is specific format. There are specific rules and regulations. There are specific contents which must be included in your audit report. Sir, what is providing all that guidance? The guidance is provided by standards on audit. So in fact, practically speaking, there are 4 standards under SA 700 series, which are SA 700, SA 701, 705 and 706. So these 4 standards from SA 700 series is going to talk about how to prepare the audit report, what should be the format of the audit report, what should be the contents of the audit report, so what content has to be there. So everything has been included in this 4 standards of 700 series, which are 700, 701, 705 and 706. So when I say I'm going to teach you this chapter audit reporting, I am simply trying to teach you the content of 4 standards, which is SA 700, 701, 705 and 706. I'm simply trying to teach you the content of these 4 standards. Clear, everybody? So apart from that, there are a few reporting requirements under 143 subsection 1. In addition to that 4 standards, there are certain provisions of the Companies Act also which are putting some reporting requirements on the auditor. So the 3 sections are 143 subsection 1, 143 subsection 3 and 143 subsection 11. So like this, we have somewhere around 3 sections under which there are various reporting requirements imposed on the auditor of a company. Even we are going to cover these 3 even we are going to cover the reporting requirements under these 3 sections of the Companies Act also. So that is what the complete perspective of this chapter, that is what we are exactly going to discuss in this chapter. So having told what exactly we are going to cover, now let me directly come to the concepts. So first I will be starting with SA 700. First, we will be revising the content with SA 700. Sir, what is SA 700 talking about? So if you see the title of SA 700, the title of SA 700 is Forming an Opinion and Reporting on Financial Statements. So that means SA 700 is going to guide the auditor how to form an opinion. Sir, how we will form the opinion? On the basis of whatever audit evidence we have, on the basis of that, how the auditor should form an opinion. And once the auditor has formed that opinion, the opinion should not be kept to the auditor himself. That should be expressed. Sir, how the opinion should be expressed? In the form of a written report. Sir, what do we call that written report? As audit report. So which means SA 700 is going to give the enough of guidance required for the auditor how to form an opinion and how to express that opinion in the form of audit report. If I put it in simple terms, SA 700 is going to tell you the entire format of the audit report, how your audit report should be, what format you have to prepare the audit report. So simply SA 700 is going to tell you about the overall format of the audit report. So there is a lot of content here regarding audit in SA 700. I will ignore all that. First, we will come to the main topic. We will talk about what should be the contents of the audit report. What exactly the contents of the audit report should be. What paragraph should be there. In that paragraph, what content should be there. That we will focus first. So the following shall be the contents of the audit report. That means auditor's report should contain the following contents. What are they? Number one, there should be title. Sir, what is title, sir? Nothing but there should be an appropriate heading. See, we will do one thing. We'll try to understand the concept from here. At the same time, we will try to simultaneously see the practicality also. I will take the help of one practical report to make you understand this concept of audit report. Okay. So first content of the audit report, there should be appropriate heading, title. An appropriate title should be there, an appropriate heading should be given. So in the case of normal company statutory audit, the heading will be independent auditor's report. So as you could see here, there is an independent auditor's report, title has been given. So first audit report, first content of the audit report is what? Title. There should be appropriate heading given. Second content of the auditor's report, once you have given the title, the second content should be addressee. See, when I say audit report is nothing but a letter through which auditor is expressing the opinion. See, to whom you are expressing the opinion, there should be certain addressee, no? For example, if you are drafting any letter, there should be certain addressee. Sir, who should be the addressee in the auditor's report? It depends on the legal form. If you are conducting audit of a company, the addressee will be shareholders. If you are conducting audit of a partnership firm, the addressee will be partners. If you are conducting audit of a sole proprietor, the addressee will be the concerned proprietor. So depending upon the legal form of the client you are doing the audit, appropriate addressee should be given. So in the case of company, generally the addressee will be shareholder. So if you see here, Reliance Industries Limited audit report, first they have given title, then they are including the addressee to whom the audit report is getting addressed to the members, to the shareholders of the Reliance Industries Limited. Clear? So first we will give title, second we will give addressee. Now the third and most important content, we are supposed to give opinion. What we are supposed to do? We are supposed to give opinion. So why? Because see, ultimately we are preparing audit report. What is the ultimate objective of preparing audit report? To express our opinion. So that's why what the standard is also telling. First you tell the title, then you tell the addressee, then directly come to the point. Then first give the opinion. Why? Because the ultimate purpose of giving the audit report is to express the opinion only. Apart from that, lot of content is there. Apart from opinion, whatever you want to say it later. But the main purpose of the audit report is going to be expression of opinion. So first come to the point, tell your opinion. First come to the point and tell your opinion. Now we will try to elaborate on this opinions. Now we will try to elaborate on this opinions in a detailed manner. Sir, opinion of the auditor can be broadly divided into two categories. See, this point we have already seen. I told at the beginning in the introduction to audit chapter, I told that any opinion, not just audit, you take any other opinion regarding anything, regarding any object, any person, opinion can be of two types only. So the two types of opinion are, I told, simply a positive opinion and a negative opinion. Yes or no? Opinion will be of broadly two categories, positive opinion or negative opinion. But this is a layman terminology. This is a what? Layman terminology. Even audit opinion also will be of two categories, either a positive opinion or a negative opinion. Like as I've told at the beginning in the introduction to audit chapter, if the auditor is satisfied that financial statements do not contain misstatement, if the auditor is satisfied they are prepared as per applicable financial reporting framework, if the auditor is satisfied that the financial statements are not misleading, they portray the correct information. So if the auditor is satisfied with all these things, then he will give something called positive opinion. He will say financial statements are giving true and fair view. However, if the auditor is not satisfied with the true and fair view of the financial statements, then he will give negative opinion. But this positive opinion, negative opinion is a very layman terminology. We use it that terms because at that point of time we are not so comfortable with the concepts of the audit. But now since we have got enough of exposure in the audit, now we will introduce. Now I will introduce you to the technical terms. So opinion of the auditor will be broadly divided into two categories. Number one is unmodified opinion and the other one is modified opinion. The opinion of the auditor can be broadly divided into two categories. What are they? Number one is unmodified opinion and the other one is modified opinion. Unmodified opinion is nothing but till now whatever we are calling it as a positive opinion. Modified opinion is nothing but till now whatever we are calling it as a negative opinion. Sir, when the auditor will give unmodified opinion? Simple guys, we already know. When the auditor is satisfied that financial statements are free from material misstatements, when the auditor is satisfied that the financial statements are free from material misstatements, and also the auditor is satisfied that financial statements are prepared as per applicable financial reporting framework. So when the auditor has performed audit procedures, obtained audit evidence, and he has satisfied that financial statements are free from material misstatements and the financial statements are also prepared as per applicable financial reporting framework, when the auditor is satisfied with these two things, he will give an opinion called unmodified opinion. And there are other names for unmodified opinion also. We even call it as unqualified opinion. We also call it as clean opinion. These are all other names for unmodified opinion. First, let us try to understand what is the logic for this name unmodified opinion. Why the name unmodified opinion? Very simple. Financial statements will be prepared by whom? Management. So auditor, what he will do? He will verify the financial statements. So auditor has verified the financial statements which are prepared by the management and he is satisfied with them, and he is telling that there is no modification required in the financial statements. They are giving true and fair view only. Able to understand? So that's why the name unmodified opinion. So how this term unmodified opinion has been derived? Because auditor is verifying financial statements which are prepared by the management and he is satisfied that there is no modification required. The financial statements are already giving true and fair view. They doesn't require any modification. So that's why the name unmodified opinion or unqualified or clean opinion. Now the standard says, as an auditor, if you give unmodified opinion, you have to use specific terminology. In the opinion section of the paragraph, if you are giving unmodified opinion, in the opinion section of the paragraph, you have to use certain terminology. Sir, what terminology I have to use? The standard says, in case if you are giving unmodified opinion, you have to use the phrases either financial statements give true and fair view. Either you have to use this phrase or you have to use the phrase financial statements present fairly in all material respects. So any one of these two phrases you have to use. Either the financial statements give true and fair view, or you have to use the phrase financial statements present fairly in all material respects. Either of these two phrases you should use. Apart from that, you are not given a choice to use any other terminology. You are not given here the opportunity to present your communication skills. So simply, if you want to give unmodified opinion, you have to use one of these two phrases. Either use the phrase financial statements give true and fair view, or alternatively you can use the phrase financial statements present fairly in all material respects. Either one of these two phrases you have to use. Like if you see the Reliance Industries Limited audit report, so as we have seen the contents from SS 700, first a title is there, then addressee is there, then comes the opinion paragraph. In the opinion paragraph, lot of things are there. If you see here in the opinion paragraph, always there will be two paragraphs. First paragraph I will talk about it later. In the second paragraph, the auditor will mainly try to express his opinion. So if I take you through certain content, they say that the auditor of Reliance company say the financial statements give a true and a fair view. So auditors of Reliance Industries Limited are telling the financial statements give what? True and fair view. That means what kind of opinion it is? Unmodified. So if you see the entire opinion, you will not be able to find a term called unmodified. But how come we are telling this is unmodified opinion? By the usage of the terms, because auditor has told in the opinion paragraph financial statements give true and fair view. By that we have identified this is a unmodified opinion. Clear everybody? So this is what regarding unmodified opinion. Understood everybody? Clear till here? So we have understood one category of opinion. Now we have to understand there is one more category of opinion which is modified opinion. See, when the auditor is fully satisfied with the true and fair view, then the auditor will give unmodified. Then when auditor will give modified opinion, when auditor is having some remarks, when the auditor finds that financial statements do not give a true and fair view, when the auditor finds that financial statements are misleading, they are not portraying the correct information. So when the auditor is having some objection, some remarks regarding the financial statements which are prepared by the management, then he will give something called modified opinion. Then he will give something called modified opinion. See, we'll come to the technical definition of the term modified opinion later. First, we will try to understand different types of modified opinion. So actually, there are three different types of modified opinion, which are number one, qualified opinion, number two, adverse opinion, and number three, disclaimer of opinion. So all the three are negative opinions only. When I say modified, it is a negative opinion, and that modification of the opinion can be done in three ways. That means you can modify your opinion in three ways. Or if I put it in other way around, there are three types of modified opinion. Sir, what are that three types of modified opinion? Either it could be a qualified opinion, or it could be an adverse opinion, or it could be a disclaimer of opinion. So first, let us try to understand when the auditor will give qualified opinion, when the auditor will give adverse opinion, when the auditor will give disclaimer of opinion. This we will try to understand. So when the auditor is going to give qualified, when he will give adverse, when he will give disclaimer, this we will try to first understand it. So for that, I have summarized the content in the form of a chart. Let me use that chart here. Yes, so this chart I have. I will do one thing. I will copy this here. We'll use the same chart here. Okay, right. So we have here. So auditor can give modified opinion if he is not satisfied with the true and fair view. That modified opinion can be given in three categories, either qualified, adverse, or disclaimer. So let us now try to understand when the auditor will give qualified opinion, when the auditor will give adverse opinion, when the auditor will give disclaimer of opinion. Okay, so this we will try to understand with the help of some simple examples. See, qualified opinion can be given in two cases. Qualified opinion can be given in how many cases? Qualified opinion can be given in two cases. First case, auditor has obtained sufficient and appropriate audit evidence, and on the basis of that evidence, auditor concluded that there is a misstatement in the financial statements, and the misstatement is material but not pervasive. Case 1, when auditor will give qualified opinion, is auditor has obtained sufficient and appropriate audit evidence. On the basis of that evidence, auditor concluded that financial statements contain a misstatement, and the misstatement is material but not pervasive. Sir, what is this? What they are trying to say? This I will try to explain it once again with the help of example. Assume that there is a balance sheet of certain company. So there are fixed assets worth 100 crore rupees. Under current assets, you have inventory 70, you have cash and cash equivalents 30, and you have trade receivables some 20. So total of the assets side, which is going to be 220 crores. Similarly, liabilities also will be there. You have equity, share capital, you have share capital 100, reserves and surpluses 50, long-term borrowings 50, short-term borrowing 70. So like this, you have a copy of the balance sheet before you. Now you are conducting audit of this entity. You verified fixed assets, no misstatement you are able to find. You verified inventory, no misstatement you are able to find. You verified cash and cash equivalents, no misstatement. So all items of the financial statements, you are not able to find any misstatement. But in the trade receivable, you have performed audit procedures. You obtain audit evidence that in the trade receivables, there is some 2 crores worth of misstatement. You have performed audit procedures in the area of trade receivables, you obtained audit evidence, and on that basis of audit evidence, you concluded that there is a misstatement of 2 crore rupees in the financial statements. So you have obtained sufficient and appropriate audit evidence. On the basis of that, you have concluded that financial statements contain a misstatement. The impact of that misstatement is material. But do you think this misstatement is so big enough to say entire financial statements are wrong? Agreed, 2 crores is material. But do you think, is it suitable? Is the misstatement so big enough to say entire financial statements are wrong? No. So if the misstatement is so big enough to say entire financial statements are wrong, then we call it as pervasive. But in the given case, there is a misstatement. That misstatement is material, but that is not big enough to say complete financial statements are wrong. That means in the given case, misstatement is material, but not pervasive. Agreed, it is material, but it is not so big enough to say financial statements are completely wrong. So in this case, what auditor will do? Qualified opinion he will give. So that is what case 1. So auditor has performed audit procedures, obtained sufficient and appropriate audit evidence, and on the basis of that evidence, he concluded that financial statements contain a misstatement which is material but not pervasive, not so big enough to say entire financial statements are wrong. In that case, what auditor will do? He will give qualified opinion. He will give which opinion? Qualified opinion. Sir, how to identify qualified opinion? See, in this case itself, what auditor will say is, he will say, except trade receivable which contain a misstatement of 2 crore rupees, financial statements give true and fair view. That means he is not giving completely positive opinion. He is not telling financial statements give a true and fair view. At the same time, he is also not telling completely negative. He is not even telling financial statements are completely wrong. He is giving a positive opinion with a slight negative remark. So the misstatement is not so big enough to say entire financial statements are wrong. So that's why what auditor is telling is, okay, financial statements give true and fair view, but there is one light negative remark. What slight negative remark is there? Trade receivables contain a misstatement of 2 crores. Apart from that, financial statements give true and fair view. So whenever you find this kind of terminology, which kind of terminology? Except or subject to certain items, financial statements give true and fair view. The moment you find this terminology, that opinion is a which opinion? Qualified opinion. That opinion is a which opinion? Qualified opinion. Understood? So this is one case in which we give qualified opinion. There is also one more case in which we will give qualified opinion. What is one more case? As an auditor, you are unable to perform audit procedures and you are unable to obtain sufficient and appropriate audit evidence. The possible effect of that undetected misstatement could be material but not pervasive. Sir, what is this? This also let me try to explain. So what I will do is I will take the help of this same example for ease in that will help me out. I don't want to draw this again and again. So I'm telling you one more case where auditor will give qualified opinion. So take for example, once again I am conducting audit of this entity. So here I will tell you my observations. See, I performed audit. I'm able to obtain audit evidence regarding fixed assets. Everything is okay. I'm able to obtain evidence regarding inventory. That is also okay. Cash and cash equivalents also okay. All other items are fine. But in this trade receivables, in the trade receivables also, there is some 5 crores worth of one debtor is there. There is one debtor who owes 5 crore rupees to my client company. From this debtor, I am unable to obtain evidence. He is not giving me external confirmation. I tried to call him. I tried to reach out to him. I am unable to get the evidence regarding this 5 crore rupees. So in this case, I am unable to obtain sufficient and appropriate audit evidence regarding an item of the financial statement. I am unable to obtain sufficient and appropriate audit evidence regarding the item of financial statement. Assuming that this 5 crores I am unable to obtain audit evidence, assume this entire 5 crores has gone wrong. If I assume even this entire 5 crore goes wrong, what will be the possible effect? What will be the possible effect? Why I am using the term possible? Because I am just assuming I am unable to get this evidence of 5 crores. Whether this 5 crores is correct or not, I am unable to get the evidence. Since I am unable to get the evidence, I am assuming even if this 5 crores goes wrong, because of which I am unable to obtain evidence, what will be the impact? The impact is material. But is it so big enough to say complete financial statements are wrong? No. That means I am unable to obtain sufficient and appropriate audit evidence, but the possible effect of undetected misstatement is material but not pervasive. The possible effect of that undetected misstatement is material but not pervasive. That means the item regarding which I am unable to get the evidence, even if that goes wrong, the possible effect is material only. It is not so big enough to say entire financial statements are wrong. See, I am telling you simple meaning. Pervasive means a so big misstatement which is big enough to say financial statements are wrong. But there is actually a technical definition given to the term pervasive. Once I complete the different types of modified opinion, we will try to revise what is the meaning of pervasive also. Technical definition also we will understand. But for the time being now, just remember pervasive as a misstatement which is so big enough to say entire financial statements are wrong. So in this case, I am unable to obtain sufficient and appropriate audit evidence. The possible effect is material but not pervasive. So what I will say is, I will say except or subject to certain item which is trade receivable regarding which I am unable to obtain evidence for 5 crore rupees, the rest of the financial statements give true and fair view. So this is also a qualified opinion. Why? Because the terminology used is except or subject to certain items, financial statements give true and fair view. So the point which I want to conclude here is qualified opinion will be given in 2 circumstances. Case 1, auditor has obtained sufficient and appropriate audit evidence, and on the basis of that evidence, he concluded financial statements contain a misstatement. The effect of that misstatement is material, but it is not pervasive. auditor will give qualified. One more case in which auditor will give qualified opinion, auditor is unable to obtain sufficient and appropriate audit evidence. The possible effect of that undetected misstatement is material but not pervasive. Then auditor will give qualified. And when the auditor is giving qualified opinion, the terminology which he will use will be except or subject to certain items. That means except one or two items, financial statements give true and fair view. If you pay close attention, that is also a negative opinion only. It is not completely positive opinion. It is a slight negative remark is there. Clear? Now, coming to adverse opinion. Sir, in which case adverse opinion will be given? Adverse opinion will be given only in one case. Sir, what is that one case? Auditor has obtained sufficient and appropriate audit evidence, and on the basis of that evidence, auditor concluded that financial statements contain a misstatement which is not just a material, which is material and also pervasive. So if I try to explain this with the help of same example, so once again I'm taking this financial statements. See, assume that I'm conducting audit of this entity. I found some misstatement in the fixed assets. I found some misstatement in the inventory. I found some misstatement in the cash and cash equivalents. I found some misstatement in the trade receivables. So that means I performed audit procedures. I obtained sufficient and appropriate audit evidence. On the basis of that, I found that there is a misstatement. The misstatement is not just material. Here the misstatements are big enough to say entire financial statements are wrong. See, in this case, I will not say except fixed assets, except inventory, except cash and cash equivalents, except trade receivables, financial statements give true and fair view. It is not fair. What I will say directly, financial statements do not give true and fair view. Don't believe financial statements, they are completely wrong. So that kind of opinion, we call it as adverse opinion. Sir, when we will give adverse opinion? When we have performed audit procedures, obtained sufficient and appropriate audit evidence. On the basis of that, we concluded financial statements contain a misstatement. The effect of that misstatement is not just material, it is pervasive. It is big enough to say financial statements are completely wrong. So in such case, I will give what opinion? Adverse opinion I am going to give. The same thing we have told even in the chart also. So auditor has obtained sufficient and appropriate audit evidence, and on the basis of that, he concluded financial statements contain a misstatement. The effect of that misstatement is not just a material, it is also pervasive. Sir, what kind of terminology we will use in that case? We will use a terminology. We will directly say in our opinion paragraph, financial statements do not give true and fair view. We'll directly say what? Financial statements do not give true and fair view. I will show you a few examples of the same. So just give me a minute. So I should have something here. Not this one. Okay. So there should be some report along with me where I wanted to show that to you. Okay. So I think this is the one. So I will show you example of qualified opinion. So I will show example of qualified opinion. So if you see here in the opinion paragraph, see what the auditors are telling. Except for certain matters, the financial statements give true and fair view. This is a qualified opinion. See, if it is an adverse opinion, what auditor will say, if it is an adverse opinion, the auditor will say directly here, the financial statements do not give true and fair view. That is extremely negative opinion, completely negative opinion. Able to understand, everybody? So that's what we are trying to say here. So adverse opinion will be given in one case. What is that case? Auditor has performed audit procedures. He has obtained sufficient and appropriate audit evidence, and on the basis of that evidence, he concluded financial statement contain a misstatement, and the effect of that misstatement is not just a material, it is also pervasive. Sir, what kind of terminology auditor will use in that case? He will use a terminology, financial statements do not give true and fair view. Completely negative opinion, extremely negative opinion, adverse, something which is completely negative. Now we have one more kind of qualified opinion, which is a disclaimer. Sir, when disclaimer of opinion will be given? So disclaimer of opinion will be given when I am unable to obtain sufficient and appropriate audit evidence, and the possible effect of undetected misstatement is material and also pervasive. Sir, what is this? Let me once again take some example. Let me once again take some simple example. The same example we'll try to use here. So take for example, I'm conducting audit of this balance sheet. I'm unable to obtain audit evidence regarding fixed assets. I'm unable to obtain audit evidence regarding inventory. I'm unable to obtain audit evidence regarding reserves and surpluses. I'm unable to obtain audit evidence regarding short-term borrowings. So now I am unable to obtain sufficient and appropriate audit evidence. The possible effect, that means the items regarding which I am unable to obtain evidence, if they go wrong, even if they go wrong, the possible effect is not just a material, it is pervasive. It is not just a material, it is big enough to say entire financial statements are wrong. So in this case, what I will say is, I will say I am unable to express the opinion. I am unable to express the opinion because I am unable to obtain audit evidence. I will not say except fixed assets, except inventory, except trade receivable, financial statements give true and fair view. No, I will directly say here, I am unable to obtain audit evidence. I am unable to perform audit procedures, so that's why I'm not in a position to express the opinion. The moment you find this terminology, we are unable to express the opinion in the opinion paragraph, that opinion is nothing but what? Disclaimer of opinion. So that's what they say in the case of disclaimer of opinion. So disclaimer of opinion will be given in one circumstance, when you don't have sufficient and appropriate audit evidence and the possible effect of that undetected misstatement is material and also pervasive, then we will give disclaimer. And when we give disclaimer of opinion, the terminology which we use in our audit report will be, we do not express an opinion on the financial statements. So final summary here, guys. The auditor can give modified opinion in three ways, or there are three types of modified opinion. Number one is qualified, number two is adverse, number two is disclaimer. Qualified opinion in how many circumstances? Two circumstances, whether we have evidence or we don't have evidence, but the effect or possible effect of the misstatement is material only, but it is not pervasive. Adverse opinion, we will give in only one circumstance. See, when we give adverse opinion, what we say, financial statements do not give true and fair view. We are directly telling financial statements are completely wrong. When you will say financial statements are completely wrong, when you know something, when you have some evidence, then only you can say completely it is wrong. So adverse opinion we will give when we have sufficient and appropriate audit evidence. On the basis of that, we found misstatements, and we came to know that misstatements are not just a material, they are pervasive also. They are big enough to say financial statements are completely wrong. Then we will say financial statements do not give true and fair view, don't believe them. Then disclaimer. Disclaimer, the name itself says disclaimer, stopping yourself. Disclaimer of opinion, stopping yourself from expression of opinion. So in the disclaimer of opinion, we will say we are unable to express the opinion. When we will say we are unable to express the opinion, when we don't have sufficient and appropriate audit evidence, and the possible effect of that undetected misstatements is not just going to be material, it is even pervasive. Then we will give disclaimer. We will say in that case, we are unable to express the opinion. We are not able to express the opinion because we are unable to obtain the sufficient and appropriate audit evidence. Clear, everybody? See here, most of the students will do one mistake. The moment they come across the term, the auditor is unable to express the opinion, they will immediately jump to the conclusion disclaimer. This is what most of the students will do the mistake here. Please pay attention carefully. You don't be that student who does that mistake. So when students see the term auditor is unable to obtain audit evidence, they will immediately jump to the conclusion disclaimer. But wait, guys. When the auditor is unable to obtain sufficient and appropriate audit evidence, there is also an option of qualified opinion. So don't immediately jump to the conclusion. When you find auditor is unable to obtain audit evidence, don't immediately jump to the conclusion disclaimer. Why? Because when the auditor is unable to obtain audit evidence, there is one more option also possible when the possible effect of the misstatement is just a material but not pervasive. In that case, auditor can give qualified also. Disclaimer will be given only when we are unable to obtain audit evidence and the possible effect of that misstatement is material as well as pervasive. Then only disclaimer. Okay, so don't do this mistake. So this mistake you will do in the case of mainly standards related questions. This point I will link it once again when I take up the chapter standards on auditing for revision. So till here, everybody comfortable? So we have seen different kinds of opinion. So broadly, opinions are of two types: unmodified, modified, and the modified opinion itself is of three categories: qualified, adverse, disclaimer. Understood? Now one more important thing which we have to know, which we have to remember, most important from the examination perspective, is the definition of the term pervasive. The definition of the term pervasive. So this term pervasive has been repeatedly tested. The definition of this term pervasive has been repeatedly tested. See, I told you simple meaning. A misstatement will be called as pervasive if it is so big enough to say financial statements are completely wrong. So this is what I have told. If the financial statements are completely wrong, then we call that misstatements as pervasive. This is simple meaning. But as we know, simple things don't work in the examination. There is one complicated definition for the term pervasive. But ultimately, the conclusion is those misstatements which are so big enough to say entire financial statements are wrong, that we call it as pervasive. But this definition only, they try to complicate it. So what is the definition? Actual definition, textbook definition given for the term pervasive. So that definition is very important. That's why I'm stressing a lot on this. So when we say a misstatement is pervasive, they say that a misstatement will be called as pervasive if it is not confined to specific elements, accounts or items of the financial statements. If the misstatement is not restricted to just one or two items of the financial statements, if the misstatement is spread across so many items, then we call it as misstatement. Clear? This we all know it. That is what even I have used in the example. If the misstatement is not just restricted to one item, if it is spread across so many items, in so many items there is a misstatement, then we can call it as pervasive. Or even though it is confined, sometimes a misstatement will be confined to only one item, but it could represent a substantial portion of the financial statements. If I give you an example for this, take for example, in this case of financial statements only, see, all items are not containing any material misstatement except fixed assets. In the fixed assets alone, there is a misstatement and the amount of the misstatement is 70 crore rupees. So here misstatement is confined to only one item, but that misstatement is representing a substantial portion, a major portion of the financial statements, then also we call it as pervasive. So number one, if the misstatement is not confined to one or two items, it is spread across so many items, then we call it as pervasive. Sometimes a misstatement will be restricted to only one item, but it could represent a substantial portion of the financial statements, then also we call it as pervasive. Or if the management has made a mistake in relation to such disclosures which are fundamental to users' understanding of the financial statements. If the management has made a mistake in those disclosures which are fundamental to users' understanding, like management has given a wrong disclosure regarding going concern. Going concern is very fundamental to users' understanding. If the management gives a misstatement, if the management gives a wrong disclosure regarding going concern only, then also we call it as pervasive. So very, very important. This could be asked as a true or false statement. This could be asked as a MCQ. This could be even asked as a descriptive question also. So when we call a misstatement as pervasive, number one, if it is not confined to specific elements or items of the financial statements. Number two, even though it is confined, it is representing a substantial portion of the financial statements. Number three, the management has made this mistake in those disclosures which are fundamental to users' understanding of the financial statements. Till here, everybody comfortable? See, till now, whatever I have explained, like different types of modified opinion, like qualified, adverse, disclaimer, what is the meaning of pervasive, whatever we have discussed till now, different types of modified opinion, that entire content has been taken from SA 705. So when I taught you different kinds of modified opinion, when qualified, when adverse, when disclaimer, this is nothing but I have taken you through the content from SA 705. In fact, we have discussed till now the content of SA 705. Clear, everybody? Able to understand? So why we discussed about opinions, guys? From where we have come till here. So in fact, we are actually trying to discuss about the contents of the audit report. In that contents of the audit report, we have seen there is a content called title, there is a content called addressee, then the main content will be opinion. So that's why we have understood what are different kinds of opinion. But the standard says that in the opinion paragraph, you will tell your opinion. But in addition to your opinion, you also should include certain important things in your opinion paragraph. So what they are trying to say here is, see, if this is the opinion paragraph, in the opinion itself, two paragraphs will be there. So in the second paragraph, you will express the opinion. Along with expression of opinion, you are also required to state certain mandatory things in your opinion paragraph. You will tell your opinion, that is here. In addition to your main opinion, you should also add certain important things in your opinion paragraph. Sir, in addition to my opinion, what things I have to add in my opinion paragraph? So here they give. So the first section of the audit report shall include the auditor's opinion under the heading opinion, and in that opinion section you have to include certain things. What are they? Identify the entity whose financial statements you have audited. That means tell the fact that tell the name of the entity whose financial statements you have audited. Number two, state the fact that you have audited the financial statements. You have to add one statement that you audited the financial statements. Number three, identify the title of each of the items of the financial statements. Describe the title of items of the financial statements, like it includes a balance sheet, P&L, statement of P&L, statement of cash flow, statement of changes in equity, etc. Give a reference to notes including summary of significant accounting policies. Even you should include in the opinion paragraph that financial statements includes notes also, which include summary of significant accounting policies. And then finally specify the date and period covered by financial statements. So you will give your opinion, but along with your opinion, these are five things also must be included in the opinion paragraph. So if you see here, you will be able to find it. So if you read it, we have audited the accompanying standalone financial statements of Reliance Industries Limited. 2 points are covered. They have told the name of the entity, and also they have told a fact that financial statements have been audited. Next, which comprises balance sheet, statement of P&L, statement of other comprehensive income, cash flow statement, nothing but items of the financial statements, a description they have given, which includes notes and summary of significant accounting policies. They gave a reference to the notes and significant accounting policies. And finally, date and period covered by financial statements. See here, date and period also they have given. Clear? So you will give opinion, but in addition to the opinion, these 5 things also must be mentioned in your opinion paragraph. So that is what regarding opinion. So 3 contents we are done with: title, addressee, opinion, and the opinion related discussion whatever we had till now, that is going to be damn important, very repeatedly asked in the examination. Clear? So now let us proceed ahead and try to understand the remaining contents of the auditor's report. So after the opinion paragraph, the next content which we have to include in our audit report is basis for opinion paragraph. Sir, what will be included in this basis for opinion paragraph? Very simple, guys. See, I have told just in the immediately previous paragraph, we are telling our opinion. That means what opinion we are giving. Like either we are giving unmodified, qualified, adverse, disclaimer. So what opinion we are giving, that opinion we actually express it in the opinion paragraph. But why anybody should believe your opinion? You are giving opinion, okay, but why anybody should believe your opinion? Any stakeholder, why he should believe your opinion? So if you let them know on what basis you have given your opinion, then the person whoever is reading that audit report, he will have confidence on that audit report and he will believe it. So if you don't let them know what is the basis for your opinion, no one is going to believe it. So that's why immediately after giving the opinion paragraph, the next content which we have to add in our audit report is we have to include a paragraph with the heading basis for opinion. Sir, what should be stated in the basis for opinion paragraph? What I have to mention in the basis for opinion paragraph? So if you see here, SA 700 says in the basis for opinion paragraph, you have to mention 4 things. In the basis for opinion paragraph, you have to state 4 things. Sir, what are the 4 things which I am required to state in basis for opinion paragraph? Number 1, you have to say that you have done the audit as per standards on auditing. You have to let the users know that you are doing the audit not as per your own choices. You have done the audit actually by following the standards on audit. And you have to also give reference to auditor's responsibilities paragraph. You have to let the shareholder know we have so many responsibilities to fulfill, and those responsibilities are actually given in a separate paragraph with the heading auditor's responsibilities. Like if you have a look at the contents, see in the content, you will be able to find one paragraph called auditor's responsibilities. Now what they're asking you to do is in the basis for opinion paragraph, you include a reference to the auditor's responsibilities paragraph. That means in the basis for opinion paragraph, you let them know, boss, apart from expressing the opinion, we have so many responsibilities, and all of that responsibilities we have given it in a separate paragraph called auditor's responsibility. Please refer that auditor's responsibility paragraph. That reference also should be given. Where? In the basis for opinion paragraph. Third one, you have to mention in the basis for opinion paragraph that you are independent of the entity and you have complied with ethical requirements. Ethical requirements we have seen in the nature, objective and scope chapter. So integrity, objectivity, professional competence and due care, confidentiality, professional behavior. So you have to include one statement that you are doing the audit after complying with independence and also after complying with relevant ethical requirements. And also you have to state whether the auditor believes that the auditor has obtained sufficient and appropriate audit evidence. That means you have to mention in your basis for opinion paragraph that whether you have obtained sufficient and appropriate audit evidence or not. So these are the 4 things which must be compulsorily stated in your basis for opinion paragraph. So what are the four things which must be stated in the basis for opinion paragraph? Number 1, you have to say that you have done the audit as per standards on audit. Number 2, you have to give reference to auditor's responsibility paragraph. Number 3, you have to state that you are independent of the entity and you comply with the relevant ethical requirements. Number 4, you have to say that you have obtained sufficient and appropriate audit evidence. So these 4 things must come in the basis for opinion paragraph, as we are seeing the practicality also here. So if you look at the basis for opinion paragraph in the practical auditor's report, the same 4 things you will be able to find here. So if you see, the auditor is telling we have conducted the audit in accordance with standards on auditing. Our responsibilities are included in the auditor's responsibility paragraph, nothing but reference to auditor's responsibilities. He is telling we are independent of the company and we comply with relevant ethical requirements. And also last thing, you have to state whether you have obtained sufficient and appropriate audit evidence or not. So if you see here that we have obtained sufficient and appropriate audit evidence. So these 4 things must compulsorily come in your basis for opinion paragraph. Now here, one more thing is there. See, if you are giving unmodified opinion, in the basis for opinion paragraph, if you mention these 4 things, that will be enough. If you are giving unmodified opinion in the basis for opinion paragraph, if you include these 4 things, that will be enough. So if you take here example, Reliance Industries Limited, the auditor has given unmodified opinion, and if you have a look at basis for opinion paragraph, in the basis for opinion paragraph, he has told only the said 4 things whatever we have read in the standard. But in case if you are giving any of the modified opinion, either you are giving qualified opinion, either you are giving adverse opinion, or you are giving disclaimer of opinion. So if you give any of the modified opinion, then what should happen is, in the basis for opinion paragraph, first you have to tell the reason why you are giving the modification. Like for example, if you have given a qualified opinion, in the basis for opinion paragraph, you have to explain the reason why you have given the qualified opinion. Then you have to state the 4 things whatever we have read in the standard. So these 4 things will come. But in case if you are giving any of the modified opinion, in addition to these 4 things, you should also explain the reason why you have given any of the modified opinion. So if you have given qualified opinion, first you explain the reason why you have given the qualified opinion, then state that 4 matters. If you have given adverse opinion, first explain the reason why you have given the adverse opinion, then explain that 4 matters. If you have given disclaimer of opinion, explain the reason why you have given disclaimer of opinion, then state the 4 matters. Able to understand? So if I show you one practical example here, anyhow we have one copy of the audit report available with us. So if you have a look at it here, see here in this case, in this audit report, the auditor has given a qualified opinion, and if you see here in the basis for qualified opinion, first he will explain the reason. First, he will explain all the different reasons why he is giving the modified opinion, and after explaining the reasons, then he will say that 4 matters that he has done the audit as per standards on auditing. He will give reference to auditor's responsibility paragraph. He will say that he has been independent and comply with ethical requirements, and whether he has obtained sufficient and appropriate audit evidence or not. So these 4 things anyhow he will say, but before that he should also explain the reason why he is giving the modified opinion, be it qualified, adverse or disclaimer. And one more thing, in that basis for opinion paragraph, you should even quantify the amount of misstatement. What do you mean by quantification? Quantification means you should explain what is the misstatement, what is the reason for the misstatement, what is the cause of the misstatement. Along with that, you should also, to the extent possible, if you are able to measure the amount of misstatement, that amount of misstatement also should be stated in the basis for opinion paragraph. In case if you are unable to quantify, if you are unable to express the amount of misstatement, you should mention the fact that we are unable to quantify, but so and so misstatement happened. So whatever it is, the reason you have to explain in the basis for opinion paragraph in case of modified opinion. Along with that, these 4 things also should be mentioned. And one more thing SA 705 also says, which says that, see, if you are giving unmodified opinion, the title of your opinion paragraph will be just opinion. If you are giving unmodified opinion, the title of the opinion paragraph will be just opinion, and the title for basis for opinion paragraph will be just basis for opinion. But in case if you have given either qualified, adverse or disclaimer, you have to change the title of opinion and basis for opinion paragraph also. If you are giving qualified opinion, the heading of the opinion paragraph should be qualified opinion, and the basis for opinion should be changed to basis for qualified opinion. If you give adverse opinion, the title of opinion paragraph should be changed to adverse opinion. Basis for opinion paragraph title should be changed to basis for adverse opinion. If you give disclaimer of opinion, the title of opinion paragraph should be changed to disclaimer of opinion, and the basis for opinion should be changed to basis for disclaimer of opinion. So if I show you once again the example here, see, in the case of Reliance, auditor is giving unmodified opinion, so opinion paragraph heading was just opinion, basis for opinion was just basis for opinion. In case if it is a qualified opinion, the titles of the opinion and basis for opinion should change. So if you see here auditor is giving qualified opinion, he has changed the title to qualified opinion, and basis for opinion has been changed to basis for qualified opinion. The same change you have to make it even for adverse and disclaimer of opinion also. Understood? So these are all the few important points relating to basis for opinion paragraph. So how many contents we have seen, guys? Till now we have seen 4 contents. What are the 4 contents we have seen? We have seen title, we have seen addressee, we have seen opinion, and basis for opinion paragraph, and what will come in that paragraph, all that we have seen. Now we have next 4 contents regarding which we will have a separate discussion. 5, 6, 7, 8. You will have 5 contents here, and the 5 contents are: number 1 is material uncertainty relating to going concern paragraph. Sir, what is this paragraph? What kind of information will be presented in this paragraph? This we will not discuss in this chapter. This we will come across when we take up the standards on audit revision. In that also, when I will be explaining you the concept of SA 570, then you will come to know what exactly is this paragraph and what will come in this paragraph. So in this chapter, we are going to ignore this content. Material uncertainty relating to going concern. This we will not know it in this chapter. We will get to know about it once we take up the standards on auditing chapter. In that also, SA 570, there we will come to know. After that, we have something called key audit matter. This we will discuss in the same chapter. First, we will try to complete revision of SA 700, 705. Once we are done with that, then we will proceed with SA 701. When we discuss SA 701, that is nothing but completely talking about key audit matter. So this key audit matter we will discuss later in the same chapter. Within a short time, we will try to discuss. Next, we have 2 contents: emphasis of matter paragraph and other matter paragraph. These 2 paragraphs also we will cover in the same chapter, but at later. So once I finish SA 701, then I will take up SA 706. When I am explaining SA 706, I am nothing but trying to explain you two contents. One is emphasis of matter and other matter paragraph. So we have four contents after that, which we will have a separate discussion. One in altogether separate chapter, standards on audit. Three in the same chapter, but after some time. Okay. So after that four contents, what is the next content? So next we have the next paragraph which should be included in the auditor's report is responsibilities of management for the financial statements. So in the audit report, you have to include one paragraph in which we have to explain what are responsibilities of the management. So what are the responsibilities which management have to fulfill? You have to explain even in the audit report also. Sir, in the audit report, what responsibilities I have to mention? Very simple. Same, like more or less similar to preconditions, whatever we have seen. So you have to include a paragraph with the heading responsibilities of management for the financial statements. In that paragraph, you should say that the management is responsible for preparation of financial statements, that too in accordance with the applicable financial reporting framework. You should also mention that the management is responsible for implementation of internal controls to ensure that the financial statements are free from material misstatements. And also you should add a statement that the management is responsible for making an assessment relating to going concern, whether entity will be able to continue as a going concern, will not be able to continue as a going concern. That assessment is responsibility of management. That also you have to include. And you should also identify who is responsible for oversight of the financial reporting process. That means who is monitoring that financial reporting process. If it is audit committee, tell that audit committee is monitoring the financial reporting process. If it is a board of directors, tell that board of directors are the persons who are having oversight of financial reporting process. So like this, you have to include one paragraph, responsibilities of management for the financial statements. In that paragraph, these four things you have to mention. What are the four things you have to mention? That they are responsible for preparation of financial statements, they are responsible for implementation of internal controls, they are responsible for making an assessment regarding entity's ability to continue as a going concern, and they are also responsible for oversight of financial reporting process. Clear, everybody? Right. So after this management responsibility paragraph, the next content which will come in our audit report is auditor's responsibility. So you have explained management responsibility. Now immediately after that, you have to include one paragraph called auditor's responsibilities. And in that auditor's responsibility paragraph, you have to mention all your responsibilities in brief. Like what I have to mention there, like you have to say that as an auditor, your responsibility is to obtain reasonable assurance whether financial statements are free from material misstatements. And your responsibility is to issue an audit report. You have to give an audit report. And you have to say that reasonable assurance is a high level of assurance, but it is not a guarantee. And you should communicate with the users that the misstatement can happen from fraud or error also. And as an auditor, you will not be concerned with each and every misstatement. You will be concerned with only those misstatements which are material, and the misstatements will be considered material if they could influence the economic decision of users of the financial statements. So that responsibility also you have to state. And you should say that you are responsible for exercising professional judgment, you are responsible for maintaining professional skepticism, and also you have to say that you are responsible for identification and assessment of risk of material misstatement, that you have to understand internal controls, and even you have to comment on appropriateness of accounting policies. So in brief, whatever your responsibilities are there, all that responsibilities you are required to state in your auditor's report under the heading auditor's responsibility paragraph. Clear, everybody? Able to understand? Right. So that is what regarding auditor's responsibilities. So we have seen what will be the management responsibilities, what will be the auditor's responsibilities. Then after that, there will be one paragraph called reporting on legal and other regulatory requirements. See, if you see here, till now, I have told you various contents, like in your audit report, title should be there, address should be there, opinion should be there, basis for opinion should be there. All this is a requirement of what? Standards. See, whatever contents we have seen here, these are all the requirements of standards on audit. See, apart from standards on audit, sometimes the governing law of your client organization, might also put some additional reporting responsibilities on the auditor. See, what I mean to say is, if you are conducting audit of a client, which is a company, the governing law for your client is Companies Act 2013. Sometimes Companies Act 2013 will put some additional reporting requirements on the auditor. Like I told you at the beginning of the chapter, there are three sections: 143 subsection 1, 143 subsection 3, 143 subsection 11. Under these three sections, there are various matters which auditor is required to report as per the requirements of Companies Act. Sir, where he will include these matters in the auditor's report, sir? He will use this paragraph, report on legal and other regulatory requirements. Similarly, if you are conducting audit of a bank, the governing law for your client company is Banking Regulation Act. Now, the Banking Regulation Act might put some reporting requirements on the auditor of a bank. Sir, in which section of the auditor's report, auditor will comment on that reporting requirements as per Banking Regulation Act? He will try to report them under this paragraph, reporting on other legal and regulatory requirements. So the name itself says, apart from the requirements of the standards, if there is any reporting requirement under any other law or regulation, those reporting requirements you can include in your auditor's report under this paragraph called reporting on other legal and regulatory requirements. Understood, everybody? So that paragraph also will be there. Now, after including all these contents, finally, auditor has to sign the report. Why? Because without your signature, the document will not be valid. No. What is the guarantee? You have only given that audit report. So that's why after including all the contents, the auditor should sign the audit report. Sir, who will sign, sir? See, if an individual is there, the same individual, if an individual practicing chartered accountant has been appointed as an auditor, the same individual practicing chartered accountant will sign the audit report. Sir, if a firm or LLP is appointed, then who will sign? Will all the partners sign? No, all the partners will not sign. Who will sign, sir? On behalf of the firm or LLP, one practicing chartered accountant will sign the audit report, whom we generally call as engagement partner. So if an individual is conducting audit, that person will mention his name, number, his membership number and sign the audit report. But if a firm is getting appointed, on behalf of the firm, one of the partner who is a practicing chartered accountant will sign the audit report. Like if I show you practically here, if a firm is appointed, this is how signature will happen. So first they will mention the name of the firm. They will mention the firm's registration number. Now, on behalf of this firm, one partner will sign name of the partner. His membership number also will be stated, and here the partner will sign. Able to understand? So like this, depending on the person getting appointed, either individual or firm, someone has to sign the audit report indicating their membership number, and also the firm's membership number also they have to mention. Clear? Firm's registration number actually. So signature will be there. Then there will be date of signature and also place of signature. So here, as you could see, place of signature, nothing but city in which the auditor has signed, that city, along with that the date on which auditor has signed, the date also will be mentioned. In addition to that, the auditors are also required to mention below their signature a unique number called unique document identification number, which we call it as UDIN in short. So this UDIN has been introduced to prevent the forgeries and to prevent this misinterpretation of chartered accountants. So to ensure that no misuse of the chartered accountant signature is happening, ICAI has come up with this concept called UDIN, unique document identification number. This is nothing but every time a chartered accountant is signing the document, he has to generate one unique number by going through one website called udin.ICAI. So in that website, every time you are signing the document, you have to generate one unique number. Every time you generate this number, some different number will come. So every time whenever you are signing any document, you have to go to that UDIN portal, generate this unique number and mention this number below your signature. Sir, why? What is the purpose of this UDIN, sir? Why? Because if someone is having a doubt whether really this document is signed by the same person or not, he can verify it by this UDIN. So he can go to that UDIN portal and he can click on the option verify UDIN, and in that verify UDIN option, if someone enters this UDIN number, you will get all the details. This UDIN was generated by which partner, on which date, for which entity, all that you will get to know. Clear, everybody? So to prevent the forgeries, to increase the reliability of the signatures of the chartered accountants, ICAI has come up with this concept of UDIN, and below the signature of the auditor, UDIN is also required to be mandatorily stated. Understood? So these are all the various contents of the audit report. So if you have a quick recap, what and all are the contents of the audit report as per SA 700? First, there should be title, there should be addressee, opinion paragraph, basis for opinion paragraph, material uncertainty relating to going concern, which we have not yet discussed, which we will discuss later in the standards. Then key audit matter, which we will discuss now, emphasis of matter and other matter paragraph, which we will discuss now itself. Then we have then we have management responsibilities, auditor's responsibilities, then auditor's signature will be there, date of signature will be there, place of signature will be there, and even UDIN number has also to be mentioned. Understood, everybody? So this is what the requirement of SA 700 regarding the contents of the auditor's report. Understood, everybody? Comfortable till here? Shall we proceed further now? So now we will proceed further, since we are done with major content from SA 700 and 705, since we understood what are all the various contents and also what are different kinds of opinion, what is the meaning of the pervasive misstatement and all. So now we will proceed ahead and try to understand about this key audit matters in a detailed manner. So we'll now try to understand in a detailed manner regarding key audit matters. We'll try to understand. So what is this key audit matter? What is this paragraph? What content will be included in the key audit matters? That we will try to understand. But to understand the key audit matters, we have to go to SA 701. So SA 701 is a dedicated standard which is going to talk about exclusively related to what is a key audit matter, when it will be included. So all that things will be covered in SA 701. So let me go to that standard once. Where is it? Just a minute, guys. Yes, here we have. So SA 701, the title of the SA 701, as you could see, the title itself says communicating key audit matters in the auditor's report. So I will tell you a brief background. What exactly is this key audit matter? Why the purpose? What is the purpose of this key audit matter? See, when compared with all other standards in the SA 700 series, SA 700 was there for a long period of time. SA 705 is also there for a long period of time. So we had so many contents already. So when compared with the other standards, SA 701 is a relatively new standard. So after we have already the audit report, after we have all the contents, still after that also there was a requirement to introduce one new standard to include one new content in the auditor's report with the heading key audit matter. Sir, what led to the introduction of this standard? When we have so much of contents in the audit report, what led to the introduction of a new standard and bringing one extra content in the auditor's report? What is the ultimate purpose behind it? See, the logic behind introduction of this key audit matters is, see, previously what used to happen is there used to be no uniformity in the audit reports. Every auditor used to prepare the audit report in his own choice. So industry started crying, hey, audit reports are all not looking similar. We want uniformity in the audit reports. So let us bring the uniformity in the audit reports. So institute gave a effort and they brought the standards and they achieved the uniformity. Now all the audit reports will look exactly similar. If you take two companies' audit reports in which auditors are saying the same opinion in both the companies, both the audit reports will look exactly similar, exactly copy pasted information, only the name of the company and name of the auditor will change. So ICA has put a lot of effort and they have brought the standards and they achieved a different level of uniformity in the auditor's report. So today auditors reports are all looking similar. Now when ICA has achieved that uniformity in the audit reports, once again industry started crying. Now what is the reason for their crying is they are telling, hey, you have brought the uniformity in the audit reports. Now all the audit reports are looking similar. If I read audit report of Reliance Industries Limited, if I read audit report of Infosys, both the audit reports are looking similar except the change in the name of the company and the name of the auditor. I am not getting any value addition. What the industry started complaining, because of the standards, now audit reports are looking exactly similar. Just there is a change in the name of the company and name of the auditor. I am not getting any value addition. By reading this audit report, I am not getting any value addition. I am not deriving any benefit. I don't get any new information by reading the audit report. So your audit report is completely waste of time. Industry started complaining. So when we didn't had uniformity, then industry cried, we brought uniformity. Now when we brought the uniformity, industry is crying once again and they're telling, now there is almost similar audit reports are there. We don't find any value addition. So what ICA has thought is there is a need to increase the informative value of the auditor's report. So when the user reads the audit report, he should not get a feeling that he is not getting any value addition. He is not getting any new information from reading that audit report. He should not get that feeling. So in order to increase the communicative value of the auditor's report. So what is the purpose behind introduction of the key audit matter? To increase or to enhance the communicative value of the auditor's report. Industry ICA has thought there is a requirement to bring one more content which will increase that communicative value, which will increase the informative of the value of the audit report. So with that intention, they have brought up this content in the auditor's report called key audit matter. Okay, so that is what the purpose. So as you could see here, the purpose of communicating key audit matter is to enhance, is to increase the communicative value of the auditor's report by providing greater transparency about the audit that was performed. So to increase the communicative value, to enhance the value provided by the auditor's report, a new content was introduced by the ICI, which is with the name key audit matters. Okay, we understood what is the purpose of key audit matter. Sir, what has to be exactly stated in the key audit matter? So what the standard says is they have defined the term key audit matter. Sir, what is a key audit matter? They told that you will do the audit of the current year, no? from the current year's audit, you find a few matters which in your professional judgment you feel it as more significant. So what the standard is telling, you would have done audit of the current year. From the current year's audit, you select a few matters which in your professional judgment, which in your own knowledge, experience and training, you feel it as most significant. Try to choose certain matters from the current year's audit and explain how you have dealt with them. Explain how you have dealt with them. That you have to identify from the current year's audit. You have to identify a few matters and that which you feel it as more significant and include them in the auditor's report. Tell them why it is a key audit matter and how you have dealt with that significant matter, so that if the users read that information, they will get better informative value from that auditor's report. See, now if you pay close attention, key audit matters will not look similar. Why? Because when I am doing audit of Reliance, I might feel some matters which are very significant. Nothing but if I put it in simple terms, in whatever audit areas you are facing difficulty, that you explain what difficulty has faced, how you have dealt with that matter. See, when I am doing audit of Reliance, there might be a few matters which I found it as difficult. The same matters might not be difficult when I am conducting audit of Infosys. The same matters might not be difficult when I am conducting audit of some Tata Motors. So depending on entity to entity, depending on industry to industry, depending on client to client, depending on facts and circumstances, whatever is significant in each audit will change. So what the standard has simply told is, dear auditor, you use your professional judgment, you apply your knowledge, information, experience, training, and you determine from the current year's audit the matters which you feel it as most significant, and that audit matters you have to explain, which we call it as key audit matters. That's what even the definition says. Key audit matters are those matters that in the auditor's professional judgment were of most significance in the audit of the financial statements. Sir, who has to decide it? Auditor himself has to decide it. Is there any hard and fast rule? No. What the standard said? It is up to the auditor's choice. Auditor will use his information, experience, knowledge, training, and he will choose which matters were significant. And key audit matters are selected from those matters which are communicated with those charged with governance. So which simply means that before you want to include a matter as a key audit matter in the auditor's report, first you have to communicate that with those charged with governance. So first communicate the matters with those charged with governance, then include it in the key audit matter. So understood the meaning? So meaning is very simple. Those matters which are most significant in conducting audit of the current year, that you have to explain. So what is the purpose? I have already told. The main purpose of the key audit matter is to enhance, is to increase the communicative value of the auditor's report. And most important thing, this is very, very important. This paragraph, repeatedly they have asked in the form of MCQs and true or false statements. See, if you communicate key audit matter, it is not a substitute for certain things. If you communicate a key audit matter, it is not a substitute for three things. So when you are communicating key audit matter, it is not a substitute for disclosure in the financial statements that applicable financial reporting framework requires the management to make. Sir, what is it? Simply, I will tell you. See, assume that or let me ask you one question. Who is required to prepare financial statements? Management. Who is required to give explanation in the notes to accounts of the financial statements? Management. Assume that the management of your client company, while preparing financial statements, they forgot to give some disclosure. They forgot to give some explanation in the notes to accounts. Now they are coming to the auditor and telling, sir, dear auditor, we have prepared the financial statements, and in the financial statements we did not include certain disclosure. You do us a favor, you will give the audit report. No, in that audit report you will use the key audit matter paragraph. No, in that paragraph, whatever disclosure we forgot to give it in the financial statements, you include that as a part of key audit matter paragraph. Is it acceptable? Do you think institute has introduced key audit matter as a substitute for giving disclosure in the financial statements? If I put it in simple terms, do you think can the key audit matter paragraph be used to include those disclosures which the management has forgot to give it in the financial statements? No. So whatever disclosures which the management is required to give in the financial statements, that management only should do in the financial statements only they should do. So key audit matter is not a substitute. Key audit matter was not given so that if the management forgets something, they can ask the auditor to include in the key audit matter. No, that is not the purpose. Key audit matter is not a substitute for giving those disclosures in the financial statements which applicable financial reporting framework wants the management to give. Similarly, giving a key audit matter is not a substitute for auditor expressing a modified opinion. Sir, what is this? Assume that I am conducting audit of some entity. In that entity, I found a material misstatement. See, if you found a material misstatement, what is your course of action? You should give modified opinion. But one auditor is telling something like this. I found a misstatement. I will not give a modified opinion, that I will explain it in the key audit matter paragraph. Is it acceptable? Do you think key audit matter is a substitute for modified opinion? No. If you are required to, if you found any material misstatement, the correct course of action is giving modified opinion. You can't say I will explain that I will explain that material misstatement in the key audit matter and give unmodified opinion. No, you can't do that. So communicating key audit matter is not a substitute for giving a modified opinion. Similarly, key audit matter is not a substitute for reporting in accordance with SA 570 regarding material uncertainty relating to going concern. See, what is the meaning of this paragraph is, if you remember, previously we have seen the contents in SA 700. In SA 700, we have gone through the contents of the audit report. In that, one of the content is material uncertainty relating to going concern. I told what is that paragraph, what content will come in that paragraph, that we will discuss in the standards on audit chapter. Did I tell you this? Yes. So in the standards on audit chapter, we will see what content will come in material uncertainty relating to going concern. Now, can the auditor say he found some matter? So what matter will come in material uncertainty relating to going concern, that we'll talk about it later. Can the auditor say the matter which is required to be disclosed in the material uncertainty relating to going concern paragraph, can the auditor say instead of disclosing it that in this paragraph, I will explain it as a key audit matter? Can the auditor do it? No. See, what I'm trying to say here is, if I once again take you back to the discussion, whatever we had just now. So if you see here there is a content, no, material uncertainty relating to going concern. See, in SA 570, we will come to know what content will come here. Can the auditor, instead of explaining that particular content in the material uncertainty relating to going concern paragraph, can he alternatively explain it in the key audit matter paragraph? No. If I put it in simple terms, the content which has to go to this paragraph, that should be disclosed in this paragraph only. Key audit matter is not a substitute for the content which has to come in the material uncertainty paragraph. So that is what they try to say here. Key audit matter is not a substitute for material uncertainty relating to going concern. And similarly, when you have communicated a key audit matter in the auditor's report, the auditor is not giving any separate opinion on any of the matter. Which means, if you see here in the audit report of Reliance Industries Limited, there are certain key audit matters. The auditor, using his professional judgment, he has identified a few matters and he explained it. Now he has, if you see here in this audit report, there are various matters which he explained it as key audit matter. Like there is something called capitalization. He gave some key audit matter as litigations and claims. See, if the auditor is explaining a key audit matter, does that mean is he giving a separate opinion on this matter? No. So when the auditor has communicated a matter as a key audit matter, he is not giving any separate opinion on any of the matter. Just he is letting you know what difficulties he has faced and how he has dealt with the audit. So communicating key audit matter is also not a separate opinion on any of the matter. So if they ask you what is the purpose of the key audit matter, you have to write this entire paragraph. You have to say that the ultimate purpose of the key audit matter is to enhance the communicative value of the auditor's report. Communicating key audit matter is not a substitute for three things. It is not a substitute for those disclosures which are required as per applicable financial reporting framework. It is also not a substitute for giving modified opinion. It is also not a substitute for material uncertainty relating to going concern paragraph. And auditor is also not giving any separate opinion on any of the key audit matter. Just he is letting you know what difficulties he has faced and how he has dealt with them. Clear? Next one. Sir, is key audit matter required to be included in each and every audit? No. For the time being now, communicating key audit matters is not mandatory for every organization. There is a applicability criteria. If you are conducting audit of certain kind of companies, then only key audit matters is mandatorily required to be included. Sir, when it is mandatory, so the auditor shall communicate key audit matter only in the following cases. When you are conducting audit of general purpose financial statements of listed entity. If you are conducting audit of a listed company, then in your audit report, compulsorily key audit matters you have to include. Or sometimes it is not a listed entity, but law or regulation may ask. Sometimes law or regulation might ask you. Like for example, if certain bank is there, even though it is not listed, Banking Regulation Act will ask you to include the key audit matter paragraph in the audit report. So like that, in case if you are conducting audit of listed entity, compulsorily you have to include the key audit matter. If it is not listed entity, sometimes law or regulation will specifically ask you to include the key audit matter. Then also you have to include. In all other cases, in rest of all the circumstances, it is up to auditor's choice. If he wants, he will give. If he doesn't want, he will not give. Clear? So that's what they say in the third point. So in listed company, it is mandatory. Even though it is not listed, sometimes law or regulation will mandate. Then also it is mandatory. In all other circumstances, let the auditor himself decide. If he feels necessary to give the key audit matter, he will give. If he doesn't feel necessary to give the key audit matter, he will not give. In rest of the circumstances, it is his choice. Next one. one more thing I will say, circumstances in which key audit matters shall not be communicated. There are certain circumstances in which you should not communicate the key audit matter paragraph at all. Even though you are conducting audit of listed entity, even though law or regulation is asking you to include key audit matter, still in certain circumstances, you will not include the key audit matter paragraph in your audit report. When, sir? Number one, when the auditor is giving disclaimer of opinion. If you are giving a disclaimer of opinion on the financial statements, then in your audit report, there should not be a paragraph called key audit matter. Logic is very simple. When you are giving disclaimer of opinion, what you are trying to say? You are trying to say that you are unable to do the audit. That's why you are not expressing opinion. See, when you are telling you are unable to do the audit only, how can one expect you to once again identify the significant matters from the audit? You are unable to do the audit itself. Then how can we expect you to explain a matter from the current year's audit? Able to understand? So that's why if you have conducted the audit and in the audit report you are giving a disclaimer of opinion, then in that audit report you should not include the key audit matter paragraph. Okay, now there are certain matters which should not be explained as a key audit matter. That means, for example, if you are not giving disclaimer, you will include the key audit matter paragraph. No, in that key audit matter paragraph, certain matters should not be explained. Sir, which matters should not be explained as a key audit matter? If I say, sometimes there will be a prohibition on law or regulation. Sometimes law or regulation will say certain matters should never be communicated as a key audit matter. Those matters you should not include as a key audit matter. Others you can explain. Okay, next one. The auditor determines that matter should not be communicated because of possible adverse consequences. So first one, law or regulation prohibits. If I have to give you example, like bank, like some RBI says that whatever international transactions are there, regarding that, no disclosure should be given. So now if I'm conducting audit of bank, I should not explain about that international transactions as a key audit matter. So when there is a law or regulatory prohibition, then I should not include that in the key audit matter paragraph. Or the auditor determines that the matter should not be communicated because of possible adverse consequences. That means if the auditor feels that because of explaining certain matter as a key audit matter, instead of advantages, there will be more disadvantages. There will be more negative consequences. If the auditor feels like that, so that matter you should not include it as a key audit matter. Some other matter you can include it. Or if the auditor concludes that certain matter is highly confidential or sensitive at the interest of the company, or if you find there is certain area which is highly confidential, which should not be brought to the public, notice that confidential information related matter also you should not include it in the key audit matter paragraph. See, summary is very simple, guys. If you are giving disclaimer in your audit report, key audit matter paragraph itself will not be there. The second point is, in your audit report, for example, if you give unmodified opinion, in your audit report, key audit matter paragraph will be there. But in that paragraph, these matters should not be communicated as a key audit matters. Which matters? When there is a prohibition from law or regulation, or if the auditor feels that because of the communication, there will be more adverse consequences, more negative consequences than the positive consequences. And also if the auditor concludes that certain matter is highly confidential or sensitive at the interest of the company, even that matters also he will not explain. Other matters he can explain. So what we have seen till now in SA 701, we have understood what is a key audit matter, what is the purpose of communicating key audit matter. We have understood when it is applicable, when it should not be communicated. Apart from that, sir, how to determine key audit matter? I have told it is simply on the basis of auditor's professional judgment. But the standard will be very unfair if it leaves everything on the auditor. So that's why they are telling you certain areas, or they are asking you certain matters which you can consider, certain factors which you can consider to determine a key audit matter. Or if I put it in simple terms, the standard is trying to help you in telling you in which areas you can look for key audit matters. See, finally, you have to use your professional judgment. Finally, auditor has to use his knowledge, experience and training to determine what is key audit matter, what is not a key audit matter. That is for sure. But the standard is trying to help you out by guiding you in which areas you can start looking for key audit matter. It is just guiding you. Once again, it is not giving you hard and fast rule. It is just guiding you in which area you have to look for key audit matters. So if you see here, they are telling you can look for key audit matters from those areas where there is a high risk of material misstatement. If you find a certain area where there is a high risk of material misstatement, from that areas you can look for key audit matter. Or you can look for key audit matters in those areas which involve significant assumptions, significant judgments like depreciation, provision for bad and doubtful debts. So wherever significant judgments are getting used, there you can go and search for key audit matter. Or even you can search for the key audit matter from the significant events or transactions that have occurred during the audit. Like for example, if there is any acquisition, if there is any demerger, from those areas also you can start searching for key audit matters. So once again, if you pay attention, it is not giving you any hard and fast rule, just the standard is giving you hint, it is giving you direction in what areas you can go and look for key audit matters. Understood, everybody? So this is how you can determine key audit matter. And also they have one more paragraph regarding presentation. Sir, how you have to present the key audit matter? Nothing but before you explain the key audit matters, there is some 1-2 paragraphs introductory information you have to give. Before you explain the key audit matters, you have to give a few paragraphs of introductory information. So what introductory information I have to give, sir? So number one, whatever when you want to present the key audit matter, you have to give one separate side heading, key audit matter. In that also, for each key audit matter, there should be separate subheading. So as you could see, first main heading is there, and for every matter there is a separate subheading. And before you actually start explaining the key audit matter, some 2 paragraphs you have to say. So what you have to say is the introductory language you have to use. Before you start explaining the key audit matter, some 2 lines of introductory information you have to present. What is that? So you have to explain what is the meaning of key audit matter. Key audit matters are those matters that in the auditor's professional judgment were of most significance in the audit of the financial statements. And these matters were addressed in the context of the audit of the financial statements, and the auditor does not provide a separate opinion. So give this 2-3 lines of introductory information, then you proceed further and try to understand try to explain what are the key audit matters. As you could see here, before they explain what actually are the key audit matters, see here a paragraph of introductory information has been given. Same thing, whatever we have read in the material, same content you will be able to find here also. Understood? So this is what SA 701 is about. A relatively small standard, very important from the examination perspective. Very frequently the questions were tested from this particular standard. So very, very important. Only 6 paragraphs are there. So don't ignore it. Even try to revise it multiple times. Understood, everybody? Clear and comfortable? So since we are done with revising the standard SA 701 and we have understood and we have revised in a comfortable manner what is the key audit matter. So the next thing which we are going to do now is we are going to talk about 2 more contents from the auditor's report. So as I was telling, there are after the key audit matter paragraph, there are 2 more contents which we did not discuss yet. So we have to look into that now. What is an emphasis of matter paragraph? What is an other matter paragraph? To understand or to know what is this other matter paragraph or what is this emphasis of matter paragraph, we have to go to the next standard, which is SA 706. So let us go to the SA 706, which is going to talk about 2 concepts, actually 2 matters which will come in the auditor's report. One is emphasis of matter and the other one is other matter paragraph. So will not take much of a time. Let us try to understand it quickly in a simple manner. So first, since there are 2 contents, I will be talking about each content in a detailed manner. First, we will be taking up emphasis of matter paragraph. What we are going to talk about? Emphasis of matter. Sir, what is this emphasis of matter paragraph? When it will be used? In what circumstances it will be used? What information will be presented in that? Let us try to have one quick recap. So first of all, what is the meaning of the term emphasis? You might have heard this term emphasis or emphasize. We often hear this term. So what is the meaning of this term emphasis or emphasize? Is to highlight. So the definition of emphasis of matter paragraph says this paragraph is used to highlight certain information which is already presented and disclosed in the financial statements. Emphasis of matter paragraph is used to highlight certain information which is already presented and disclosed in the financial statements, but in the auditor's opinion, that is fundamental to users' understanding. That is fundamental to users' understanding. So a matter has already been presented and disclosed by management where in the financial statements, but the auditor feels that that matter is very important for users. That matter is very fundamental for users' understanding of the financial statements. So auditor thought it will be necessary to highlight somewhere in his audit report. In that circumstances, to highlight such matters, what auditor can do is he can use the emphasis of matter paragraph. I will give you one small example to wind up this entire discussion. Take for example the management. You are conducting audit of the client X Limited. Now the management of the client has prepared financial statements. In their financial statements, they have notes to accounts also. In that notes to accounts, they have explained about one contingent liability. Might be this company is going through one legal case. They're fighting one legal case. And there are chances of winning also. There are chances of losing also. Outcome of the case is not yet certain. So if the company loses that case, the company has to pay penalties amounting to 1,000 crore rupees. The case is still going on. There is no certainty. So what the management has done is, as per the accounting standards, they have disclosed that as a contingent liability in their financial statements. Did the management do any mistake? No. So there is a contingent liability. This item is already presented and disclosed by the management in the financial statements. Management, without their mistake, they have already presented or disclosed this information in the financial statements. But as an auditor, what I thought is, I cannot expect each and every user of the financial statement to read each and every page of the financial statements. I can't expect that. So even if the people try to read it also, they might not be able to understand. So if you take an ordinary user, he will just see profit, he will just see balance sheet, total assets, he will just see some cash flow statement on an overall basis. He will see. He will not go through each and every content given in the audit report or each and every content given in the financial statements. So as an auditor, I thought that this matter, even though it has already been presented in the financial statements, but it is very fundamental for the user to know this. It is very important for the user to know that the company is going through pending case. Management, without their mistake, they have disclosed. But as an auditor, I am feeling that some users might miss out on this matter. I thought it will be better if I highlight this information somewhere in the auditor's report. Now what auditor can do is, sir, how can he highlight? Can he modify the opinion and highlight? No. See, when we give modified opinion, when the management did some mistake, in the given case, did the management do any mistake? No. Why? Because as I'm telling, they have clearly explained. So there is no mistake in the management from the management side. So I can't highlight it by giving qualified opinion. So now what I can do, so now you follow SA 706, which says in these circumstances in the audit report, you use one paragraph called emphasis of matter paragraph. In that, highlight the information. In that, highlight that information, whatever you want to highlight. So what I will do is, in this case, if I am auditor of this company, I will use the emphasis of matter paragraph and I will write there, dear members, please go and refer so and so note number. Assume that contingent liability has been explained in note number 24. So I will write in the emphasis of matter paragraph, dear user, please go and refer note number 24. There you will be able to find some information regarding contingent liability, which is very important for your understanding of the financial statements. So nothing but I'm drawing the user's attention to certain matter which is already presented or disclosed in the financial statements. In those circumstances, I'm going to make use of emphasis of matter paragraph. That's it, as simple as that. So if we start reading about it, so if you have a quick look at what they are trying to say regarding the emphasis of matter paragraph. So if you see here, right. So what is emphasis of matter paragraph? This standard I will take some time in going through in a detailed manner. Why? Because once again important from the examination perspective. So emphasis of matter paragraph is a paragraph included in the auditor's report that refers to a matter which is appropriately presented or disclosed. There is certain matter which is already presented or disclosed in the financial statements, that in the auditor's judgment is of that important to which is fundamental to users' understanding of the financial statements. So in this entire definition, the most important term is the matter which is appropriately presented. Certain information is already presented or disclosed in the financial statements. Just auditor wants to draw it to users' attention. Then he will use which paragraph? Emphasis of matter. Sir, when I will use emphasis of matter? Once again, they elaborate in a certain manner. The auditor should use an emphasis of matter paragraph only provided the auditor would not be required to modify the opinion in accordance with SA 705 as a result of the matter. Which means, for example, if you find a misstatement in the financial statements, instead of giving a modified opinion, can you just highlight that in the emphasis of matter paragraph? No. You can highlight only those matters in the you can only highlight those matters in the emphasis of matter paragraph which are not misstatements, because of which you are not required to give modified opinion. If there is some item because of which you are required to give modified opinion, that we have to take proper action of giving the modified opinion. We can't just highlight it in emphasis of matter paragraph. So what they say here is the auditor shall include only those matters in the emphasis of matter paragraph because of which auditor is not required to give modified opinion. If there is certain matter because of which you are required to give modified opinion, give a modified opinion only. Don't just highlight it in the emphasis of matter paragraph. Next one. Also, when a certain matter has been determined as a key audit matter, see, if you found some matter in the financial statements that you thought that it is a key audit matter, you want to explain it as a key audit matter. Once again, will you include it in the emphasis? No. If you determined a certain matter to be a key audit matter, explain in the key audit matter paragraph only. Don't bring it here in emphasis of matter paragraph. So two cases, you should include only such matters in the key audit matter paragraph because of which you are not required to give modified opinion. Similarly, include only those matters in the emphasis of matter paragraph which are not required to go to key audit matter paragraph. And also they have given a few examples, some examples, not hard and fast rules, just they are giving you a few examples of the matters which might be highlighted in the emphasis of matter paragraph. So what examples, sir? As you could see, uncertainty relating to future outcome of litigation, like I have told, contingent liability, company is going through pending litigation that you thought is very fundamental to users understanding. You want to highlight it, where you can highlight it in the emphasis of matter paragraph. Or a significant subsequent event, or in the financial statements management had adjusted one subsequent event that you want to bring it to users attention, bring it to the users attention by using emphasis of matter paragraph. Or early application of a new accounting standard, your client has adopted accounting standard more well in advance, you want to bring that to the users attention, bring it by highlighting it in the emphasis of matter. Or if there is any major catastrophe, if there is any major calamity, fire accident is there, or some calamity has happened, so if you want to highlight about those information which is already presented or disclosed in the financial statements, these are the examples of certain matters which can be highlighted as an emphasis. Once again, I'm telling you guys, this is just an illustrative list, this is not a full and final list, this is not conclusive list, these are just an illustration of few matters which can be highlighted in the emphasis of matter. Sir, how you have to present the emphasis of matter? Very simple. When you want to include an emphasis of matter paragraph in the audit report, use a separate section in the audit report. Give a separate side heading, emphasis of matter. There you have to highlight it. And also you should give a reference to the matter being emphasized. Nothing but, as I have told in my explanation, so you have to even give a reference to the respective note number where the management has presented this information. So in our example, the management has disclosed about contingent liability note number 24. When I highlight this matter in the emphasis of matter paragraph, in that certain paragraph, I have to even mention that go and refer that note number 24, where the user can go and get more information regarding that matter. That reference also should be given. That's why we say, see, if you have to give the reference, first it should have been included in the financial statements. So that's why we say emphasis of matter paragraph will be used to highlight that information which is already presented or disclosed. Why? Because when information is already presented or disclosed, then only you can give reference. So manner of presentation, 2 points. Number 1, add it in a separate paragraph. Don't mix it in the other paragraphs. Number 2, wherever the user will be able to find about that matter in the financial statements, give the reference to that information also, like referring to that respective note number and all. And also tell that auditor's opinion is not modified. And one more line you have to add in the emphasis of matter paragraph. You have to say that you are just highlighting this matter. You are not giving any modified opinion. Because management did not do any mistake, you are just highlighting it. So you have to add one sentence there. We are just highlighting this information for you, we are not modifying the opinion because of this. That also you have to say. So that's what, if you see here, Reliance Industries Limited audit report is having emphasis of matter paragraph. If you could see the terminology, they are telling we draw attention to note number 32A. That means there is some information which is already presented in note number 32A. As an auditor, I am asking the user to go and refer that note number 32A, in which certain information is there which will be helping the user to understand the financial statements in a detailed manner. And also, if you see here, our opinion is not modified. As I have told in the emphasis of matter paragraph, you have to include a line that we are not modifying the opinion. See, one important question I would like to ask you here: do you think emphasis of matter paragraph will be there in each and every audit report? The answer is no. Only when the auditor finds something which is important for users understanding, which is required to be highlighted, then only the auditor will use the emphasis of matter paragraph. If you are conducting audit of certain entity in which there is no matter which is so fundamental to users understanding, which is required to be highlighted, emphasis of matter paragraph will not be there in that audit report. So don't be of a wrong notion. Emphasis of matter paragraph will be there in each and every report. It is not the case. Only when required it will come. So the thing which I want to say is, even if tomorrow if you see some audit reports, you might not be able to find the emphasis of matter. Don't worry then. Don't come and ask me then, sir, you told emphasis of matter paragraph will be there, it is not there in the given case. There is no guarantee it will be there in each and every case. Only when required, auditor will include it. Clear? Next, see, one more paragraph is there here. Emphasis of matter paragraph is not a substitute for certain things. Same whatever we have read in the key audit matter paragraph. Key audit matter paragraph is not a substitute for 3 things: for disclosures which are required in the financial statements, for giving a modified opinion, and also for explaining something in the material uncertainty relating to going concern paragraph. Even emphasis of matter paragraph is also not a substitute for the same 3 things. So same paragraph, copy pasted information from SA 701 only. So this is what regarding emphasis of matter paragraph. Now SA 706 talks about one more content. The one more content is other matter paragraph. There is one more content which we will talk about, other matter paragraph. So very simple, guys. If emphasis of matter paragraph is used to refer to that information which is already presented or disclosed in the financial statements, they say that other matter paragraph will be used to refer that information which is not presented and disclosed in the financial statements. If you want to tell something to the users which is not presented in the financial statements, then you can make use of other matter paragraph. So that's what the definition says. But practically speaking, why other matter paragraph will be used is to explain the responsibility related matters. If there is any additional responsibility taken by the auditor, if there is any reduction of the responsibilities of the auditor, so that responsibility related matters we can explain in other matter paragraph. Like for example, if there is a separate branch auditor, you did not do the audit of the branches, you want to tell that to the shareholder, where you can tell it? You can tell it in the other matter paragraph. So other matter paragraph will be used for those information which is not presented or disclosed in the financial statements, but mainly it will be used for auditors reporting responsibilities. As you could see, it is mainly used for auditors responsibilities, any additional responsibilities taken or any reduction in the responsibilities. Clear everybody? So that's all regarding the other matter paragraph. Nothing else to discuss regarding other matter paragraph. And one more thing they say here, before you want to include emphasis of matter paragraph or other matter paragraph, first you have to communicate those matters with those charged with governance, then only include them in the auditor's report. Same like key audit matter. If you want to include key audit matter, first you have to communicate with those charged with governance. No. Similarly, if you want to include a certain matter in the emphasis of matter paragraph or other matter paragraph, first you have to communicate with those charged with governance, then only you include them in your auditor's report. Clear? So that's all regarding this emphasis of matter and other matter paragraph. Understood everybody? Clear and comfortable? So with this, we are done with mostly the 4 standards. So as I have told, in this chapter, we are going to, this chapter has been completely taken from 4 standards. What are the 4 standards from which this chapter has been taken from? SA 700, SA 701, SA 705 and SA 706, and important content from all these 4 standards we have covered. Okay. I think one more small thing also I want to explain from SA 705. One more thing I want to explain. Yeah, this one. This point I want to explain. This is also having high chances of getting tested in the examination. This is actually from SA 705. So what is that? Consequences of an inability to obtain sufficient and appropriate audit evidence due to management imposed limitation after the auditor has accepted the engagement. That means you have accepted the audit, you have started doing the audit, but after you have accepted the audit, you are unable to obtain audit evidence. After you have accepted the engagement, but during the course of conducting of the audit, you were unable to obtain audit evidence because management has imposed some limitation on you. In that case, what will be the consequences? So if I put it in simple terms, what they're trying to say here is, assume that there is a certain company X Limited. There is an auditor. So both of them have agreed to the terms and conditions and the auditor has accepted the audit. But during the course of conducting of the audit, this auditor is not able to obtain sufficient and appropriate audit evidence. He is not able to obtain sufficient and appropriate audit evidence. Sir, why he is unable to obtain sufficient and appropriate audit evidence? Because the management of the client company is imposing some limitation. They are putting some restriction on the auditor. That's why he is unable to obtain the sufficient and appropriate audit evidence. In these cases, what will be the consequences? In these cases, what will be the consequences? In these circumstances, what auditor is supposed to do? Regarding that matter, guidance has been given under SA 705. Let us see what guidance has been given. So we already have a chart here. There is no need to prepare the separate chart. The chart is there in the material itself. We'll use the same chart to understand it. So inability to obtain sufficient and appropriate audit evidence due to a management imposed limitation after the auditor has accepted engagement. You have accepted it, you have started doing the audit, but during the course of audit, you were unable to obtain sufficient and appropriate audit evidence because the management has put some restriction on your work. Then what you should do? First thing, request the management to remove that limitation. Go to the management and say, boss, please remove the limitation. Please let me do my work. If you are unable to obtain audit evidence because of management imposed restriction, what you should do? Obviously, common sense. You should go to the management and first request them, sir, please let me do the work. Don't put me any restriction. Now, in most of the cases, what will happen is management will remove the restriction. They don't want to mess with the auditor. Why? Because if the clients try to mess with the auditor, auditors will make their life a mess. So in most of the cases, when you go and request the management to remove the limitation, yes, management will remove the limitation. What you will do if the management removes the limitation? You have gone there for audit. Now the management has removed the limitation. Do the audit. Continue with the audit. Simple scenario, no complication. But when the problem will arise, management is refusing to remove the limitation. I went to the management, made a request, boss, please remove the limitation. Please let me do the work. Management is telling, no, we will not remove the limitation. So then what I should do? Then what you should do is first go and communicate with those charged with governance and then perform alternative audit procedures. So if the management is not removing the limitation, first course of action, there will be those charged with governance. If they are there, go to those charged with governance, go to the top level management and go and complain them. Sir, your management is not removing the limitation. Or try to analyze whether you can do any alternative audit procedures. If the management is not permitting, is there any way by which you can perform alternative audit procedures and get the evidence? Think it. See, in some cases it will be possible, in some cases it will not be possible. Sometimes what will happen is when we communicate with those charged with governance, they will punish the management and remove the limitation. Or sometimes when we go and communicate with those charged with governance are also a part of the management only, they are also not helping us, or we are unable to perform any audit procedures, any alternative audit procedures. So if the management does not remove the limitation, first we go and communicate with those charged with governance and try to perform alternative audit procedures. But if we are unable to obtain audit evidence, even after communicating with those charged with governance, or even after trying to perform alternative audit procedures, still I am unable to obtain audit evidence, then what I should do? Then you have to determine what is the possible effect of that undetected misstatement. So still you are unable to obtain audit evidence, no? Determine what will be the possible effect. That means whatever items regarding which I am unable to obtain evidence, if that item goes wrong, if it is material or material and pervasive. If I came to know that the possible effect of the misstatement is material only but not pervasive, continue the audit with the other areas and you try to give a qualified opinion. You try to give a what? Qualified opinion when the possible effect of that undetected misstatement is material but not pervasive. In case if the possible effect of the misstatement is material and also pervasive, then first option what they're asking you to do is, to the extent possible, withdraw from the audit. To the extent possible, resign from the audit. Why? Because management themselves are putting the restriction, they themselves are not giving you scope to obtain audit evidence, and the possible effect of the misstatement is material and pervasive. Who asked you to continue on that audit? So if possible, try to withdraw from the audit. In certain cases, withdrawal from the audit will not be possible. Then what you do? Then you give disclaimer of opinion. Very, very important. So if the possible effect is only material but not pervasive, we continue the audit and give the qualified opinion. But when the possible effect is material and also pervasive, the first option should be withdrawal. To the extent possible, you should try to withdraw from the audit. But in some cases, withdrawal might not be permissible because of law or regulation or practical circumstances, whatever it is. If withdrawal from the engagement is not permissible, then continue the audit and give the disclaimer of opinion. Clear, everybody? So very, very important from the examination perspective. There is a chance of this question getting asked in the examination. Clear, everybody? So whatever it is, so all the important content from SA 700, SA 701, SA 705 and SA 706 we are done with. The 4 standards revision we are done with. Clear, everybody? Able to understand? So since we are done with the 4 standards, now what we will do is, before I talk about the reporting requirements under various sections, we will try to revise 3 more concepts. Before we so there are actually certain reporting requirements under 143 subsection 1. There are some reporting requirements under 143 subsection 3. There are some reporting requirements under 143 subsection 11, which we also call it as CARO 2020. And there is certain reporting requirement under 143 subsection 12 exclusively relating to fraud if the auditor has identified. So we have various reporting requirements under various sections of the Companies Act. But before I talk about these reporting requirements under these various sections, I want to explain a few concepts. So what are those concepts which I'm going to explain? So I'm going to talk about a concept called branch audit. Then I'm going to talk about a concept called joint audit. After that, we will also try to have a look at the concept called internal audit and related standard. So that we will try to revise it quickly. Then we will go ahead and try to understand the reporting requirements under 143 under various subsections of section 143. So now our immediate agenda is to revise the concept of branch audit, to revise the concept of joint audit, and also to revise the concept of internal audit. Along with that, we will also try to revise quickly the content of SA 610 also. So first I will start with the concept of branch audit. Sir, what is branch audit? See, generally it is quite common that when the company expands, they will open up various branches. If you take, there is certain company X Limited whose head office is located at Mumbai. Now, slowly this business started expanding and they have opened their branches in Hyderabad also. They have opened their branch in Delhi also. They have opened their branch in Chennai also. They have opened their branch in Bangalore also. So when generally business expands, its geographical spread also increases. See, in normal circumstances, what will happen is an auditor will be appointed for the company. So a person or a firm will be appointed as auditor of a company. Generally, that auditor will only conduct audit of head office and all the branches also. So the Companies Act is giving the permission, the person whoever has been appointed for the company as a whole, principal auditor we call him. So generally the principal auditor himself can do the audit of all the branches. So under the Companies Act there is a permission, the principal auditor himself can do the audit of all the branches also. But in some circumstances, either at the request of the auditor or the company on its own choice, they might also take a decision the accounts of the branch has to be audited by separate auditor. That decision also can be taken. Take for example, in this case, the company decided that they have appointed Mr. A, principal auditor for the company. And this auditor told, sir, I will look after the head office, I will look after the Hyderabad branch also, I will look after Hyderabad, Delhi branch also, I will look after Chennai branch also. But why don't you appoint a separate auditor who will exclusively go and verify the books of accounts of Bangalore branch? So either that request could be made by auditor or the management on suo motu also they can take their decision. So whatever it is, assume that in this given case, the company has appointed a separate person, Mr. B, exclusively to conduct the audit of books of accounts of only Bangalore location. That decision also can be taken. So principal auditor himself can do the audit of entire company, or the company at their own request or at the request of the auditor, they can also appoint a separate person to conduct the audit of accounts of the branch. Now in this case, Mr. B will be called as branch auditor and the main auditor will be called as principal auditor. But the main auditor will be called as principal auditor. In our case, the principal auditor is Mr. B and the branch auditor will be Mr. B. So now who can conduct, if the company wants to appoint a separate person to exclusively conduct the audit of accounts of the branch, who is eligible to act as auditor of a branch? Simply another practicing chartered accountant or another form of chartered accountants. Whoever is eligible to act as auditor of a company, the same person can be appointed as auditor of even the branches also, if at all, if the company wants to do it. So a practicing chartered accountant or firm of chartered accountants can be appointed as an auditor of a branch. Now, sometimes what will happen is the company will have a head office in India. The company is basically an Indian company, but it might have a branch office located outside India. Sometimes an Indian company might have a branch office located outside India. Take for example US. You take so many IT companies today. They have their head office. They are primarily incorporated into India, but they have their place of business outside India. They have their branches outside India. So take for example, there is a certain company X Limited, which is an Indian company. They have a branch which is located outside India. If the company wants to appoint a branch auditor or who could do the audit of accounts of the branch which is located in the US, who is eligible to be appointed as auditor of the books of accounts of US branch? So Companies Act says if the principal auditor wants, the principal auditor himself can go and conduct the audit of the foreign branch. Or the company might appoint another practicing chartered accountant or another form of chartered accountants in India to go and conduct the audit of accounts of that foreign branch. And the Companies Act is also giving one more permission. In case if the branch is located outside India, a person who is permissible to act as auditor as per the laws of that respective country in which the branch is located, even that person also can conduct the audit of accounts of that foreign branch. Which means, so if a branch is located outside India, take in our example US, either the company's principal auditor himself can do, or another practicing chartered accountant from India can go and do the audit of that US accounts branch. Or even a person who is qualified to act as auditor of US, a person who is qualified to act as auditor as per US laws, like there will be CPA, a local CPA also can conduct the audit of that US accounts, US branch. If a branch is located in if the branch is located in UK, a principal auditor himself can do the audit of that branch, or another practicing chartered accountant from India can go and do the audit of that branch. Or if the company wants, they can even appoint a local person who is eligible to do the audit of the company as per UK laws, that is ACCA also can do the audit of that UK branch. So like this, these are the people who are eligible for getting appointed as auditor of branch. Sir, when branch auditors will be appointed, when there are two auditors actually, principal auditor and branch auditor, how the audit will happen? The logic is very simple here. See, take for example, there is a company X Limited, there is a person Mr. A who is a principal auditor. For one branch exclusively, another person Mr. B was appointed. He is a branch auditor who will conduct audit of accounts of only one or two branches. So now this branch auditor, generally what he will do is, he will verify the books of accounts of that respective branches for which he has been appointed. And he will prepare an audit report on the books of accounts of the branches, whatever we have verified. Now this branch audit report will be circulated to principal auditor. That branch audit report will be circulated to principal auditor. Now the principal auditor, using the work whatever the principal auditor has done, and also using the audit report of the branch auditors, now the principal auditor will form a opinion on the entire company, and he will give a single audit report on the entire company. But in preparing that audit report, he will use his own work, and he will also use the branch auditor's report. So using his own work and using the branch auditor's work, he will prepare one single report on the entire company, and this report only will be circulated to the shareholders. Only principal auditor's report will be circulated. Whatever branch audit report is there, that branch audit report actually goes from branch auditor to the principal auditor. Now the principal auditor will make use of the branch auditor's work, and also he does his respective work, and he will form an opinion on the entire company, and that report will be circulated to shareholders. Only principal auditor's report will be circulated to shareholder, not the branch auditor's report. Understood? And also whatever reporting requirements that are applicable for principal auditor, all that reporting requirements will be even applicable for the branch auditor also. Whatever reporting requirements that are applicable for principal auditor, all that reporting requirements will be equally applicable for branch auditor also. So if the principal auditor is required to report on CARO, even the branch auditors are also required to report on CARO, irrespective of the turnover of the branch and all. So whatever reporting requirements that are applicable for a principal auditor, all that reporting requirements will be even applicable for branch auditor also. Understood, everybody? So this is what regarding who can be appointed as branch auditor and all. And one more thing, who will appoint the branch auditor? Sir, who can appoint the branch auditor? We have seen who can be appointed as branch auditor, but I'm asking who will appoint the branch auditor. Generally, the branch auditor of the company will also be appointed by shareholders only. Members will appoint the principal auditor, same members also will appoint branch auditor. But if the members want, they can delegate that power to board of directors to appoint the branch auditor. See, the power to appoint principal auditor is always with the shareholders. They can't delegate the power to board of directors to appoint the principal auditor. When it comes to branch auditor, for appointment of branch auditor also, the power is there with the shareholders only. But if they want, they can delegate that power to appoint the branch auditors to the board of directors. But you have to remember here, the power to appoint the principal auditor can never be delegated by shareholders to the board of directors. Only the power to appoint branch auditor can be delegated to the shareholders, to the board of directors. Clear and comfortable, everybody? Now, so there is one more related aspect to this branch audit concept. A small paragraph from SA 600 is there. A small paragraph from SA 600 is there, which we will try to analyze, which is applicable for our CA inter examination. So which is, what procedures are required to be performed by the principal auditor when using the work of other auditor as per SA 600. Now, if I talk from the branch audit perspective, I told just now that branch auditor will prepare the branch audit report and give it to the principal auditor. I told that principal auditor, he will do his respective portion of the work, and using the audit report which is given by the branch auditor, he will prepare a single audit report on the entire company. Now, in the process of preparation of audit report on the entire company, is the principal auditor making use of branch auditor's work? Yes. Is the principal auditor making use of the branch auditor's work? Yes, principal auditor is making use of the branch auditor's work. Why? Because he is forming opinion on entire company. For example, there is a company X Limited. It is having head office and 4 branches. Out of that 4 branches, principal auditor is conducting head office audit and 3 branches. Branch auditor is conducting audit of only 1 branch. But principal auditor is required to express an opinion on entire company. But while expressing that entire company audit, he has conducted audit of only head office and 3 branches. But 1 more branch was audited by branch auditor. So that's why what principal auditor is doing, he is completing his respective portion of the work. And when it comes to this branch audit, for which a separate branch auditor is appointed, he will make use of this branch auditor's work, then prepare an audit report on the entire company. Yes or no? So one thing is for sure, principal auditor will make use of the branch auditor for the purpose of expressing and for the purpose of preparing the audit report on the entire company. Now, when the principal auditor is making use of the branch auditor, or even we call it as component auditor, when the principal auditor is making use of that branch auditor or the component auditor, what procedures he need to perform, what precautions he has to take, in that way also you can call it. See, I'm a principal auditor. I'm making use of the branch auditor's work. I need to take some precautions. No, I need to follow some procedures. So as a principal auditor, I'm using the work of someone else. So as a principal auditor, when you're using the work of other component auditor or other branch auditor, what procedures you will perform, what precautions you will take. Those procedures and precautions are actually explained in SA 600. Where that procedures and precautions are actually explained in SA 600, they have explained that procedures and precautions. So what procedures are required to be performed by the principal auditor when you are using the work of branch auditor's work? Very simple, guys. First, you have to advise the other auditor the use that you are going to make out of that person's work, and also you have to make sufficient arrangements for coordination. If I put it in simple terms, if as a principal auditor you want to make use of the branch auditor's work, first what you should do is you should have an official communication with the branch auditor. You should let the branch auditor know how you are going to make use of his work, in what manner you are going to make use of his work. Like if I'm a principal auditor, I will call the joint auditor and say, boss, I will call the branch auditor and say, boss, if you conduct the audit of the branch and give your audit report, using that audit report and using my work, I will prepare the report on the entire company. So first, as a principal auditor, you have to let him know how you are going to make use of his work. And also you should make sufficient arrangements for coordination. That means at the beginning of the audit only, you have to make sufficient arrangements for coordination, like at what duration you will talk. So like for example, I have told once in a week we will have a Zoom meeting and we'll discuss the proceedings of the audit. So like that, the first procedure which you have to do as a principal auditor, if you want to make use of the branch auditor's work, let the branch auditor know how you are going to make use of his work and also make sufficient arrangements for coordination. Next one, second one. The principal auditor would inform the other auditor the matters which are requiring special consideration and also timetable for completion of audit. Even you should discuss with him as a principal auditor if you found some matters which are very critical, which require special attention. Even tell the branch auditor also. For example, as a principal auditor, I thought that in my client's company, revenue requires special consideration. Tell the branch auditor also once, boss, when you are doing branch audit, pay special consideration to revenue, and also discuss with him timetable for completion of audit. Let him know within what time you are supposing to complete the audit. For example, if a principal auditor is supposing to complete the audit within 20 days, at least 5 days before you should report the branch auditor. At least 5 days before you have to receive the audit report of branch auditor. If you don't get it, you will not be able to complete your timetable. So second step, let the branch auditor know what areas require special consideration and also discuss with him timetable for the completion of audit, and advise the other auditor of significant accounting, auditing and reporting requirements and obtain representation as to compliance with them. As a principal auditor, let your branch auditor know what significant accounting procedures you have to follow, what auditing reporting requirements will be there, what sections you have to report. Even let the branch auditor also know about the reporting requirements, not just letting him know, ask him to give a written confirmation that he will also comply with that accounting, auditing and reporting requirements. And finally, the principal auditor might discuss with the other auditor the audit procedures which he has applied, and even he can ask a written summary of audit procedures he has performed. For example, branch auditor gave you his audit report, but you have some questions whether the branch auditor did the work properly or not. If you want, you can inquire the branch auditor. You can call the branch auditor and ask him, sir, please explain me what procedures you have performed. Or even you can ask the branch auditor to give a written summary of whatever procedures he has performed, so that you can get the comfort zone whether the branch auditor did the work properly or not. And finally, if you are not satisfied with conducting inquiry and getting the written summary, the principal auditor may also wish to visit the branch auditor. He can also go and visit that branch location once. So as a principal auditor, if you want to make use of the branch auditor's work, these are the procedures you have to follow. And these procedures, where they are mentioned in SA 600, they have mentioned 5 steps, 5 very simple steps. Number 1, you have to discuss with him how you are going to make use of his work and make sufficient arrangements for coordination. Number 2, discuss with him which areas require special consideration and also discuss with him timetable for completion of the audit. Number 3, discuss with him significant accounting, auditing and reporting requirements and get a written representation as to compliance with them. Number 4, if you have any doubts, ask him, inquire him what procedures he has performed, or even you can ask from him a written summary of whatever audit procedures that he has performed. And finally, if you are not satisfied, you can even go and visit that other auditor also. So this is what a small portion of branch audit which is relevant at the CA inter level. Clear everybody till here? So now we are left with 2 more concepts. One is a joint audit and the other one is internal audit. Let us try to talk about these things also. So now immediately we'll start talking about joint audit. So what basically is joint audit? So, and there is also one relevant standard talking about joint audit. Whatever content which we are going to talk about it now, that has been actually taken from SA 299. So let us try to understand about this joint audit in a detailed manner and also the related standard SA 299. So what is the meaning of joint audit? Very simple, guys. When more than one auditor have been appointed for the same entity, for the same financial year, and also having same scope of work, that we call it as joint audit. When more than one auditor is appointed for the same entity, have for the same financial year, and also if they have same scope of work, such assignments we are going to call them as joint audit assignments. So that is what the simple definition. So now on the basis of definition, let us try to understand a few cases. Let me try to put it before you a few cases, and you have to reply back to me whether those audits will fall under joint audits or not. Take for example, there is a company X Limited. For the financial year 2020-21, they have appointed a firm ABC and Co, in which three practicing chartered accountants are there, ABC. Now for this year to the 2021, can this be called as a joint audit? No, this can't be called as a joint audit. Why? Because the auditor is only one. See, when I say auditor, more than one appointment you have to do. Here the entity is appointing only one audit firm. In that audit firm, how many partners are there, that is irrelevant, but the appointment is made only for one auditor, one audit firm. So this can't be called as a joint audit. This is a normal audit only. Or take for example the company X Limited. For the financial year 2020-21, they have appointed Mr. A as a principal auditor. For one of the branches, they have appointed another person, Mr. B, as a branch auditor. Can this be called as a joint audit assignment? No. Why? Because to call as a joint audit assignment, there should be more than one auditor for the same entity, for the same financial year, and also they should have same scope of work. In this case, same entity, same financial year, but the scope of work is different. Mr. A, principal auditor, will have the scope as entire company. Mr. B, branch auditor, will have the scope of only that one or two respective branches for which he has been appointed. So since the scope is different, this assignment can't be called as joint audit assignment. Or there is a company X Limited. For their financial year 2020-23, they have appointed a person, Mr. A, as a company auditor. They have appointed another person, Mr. B, as a tax auditor. Can this assignment be called as joint audit? Once again, no. Sir, why no? Why? Because there is a same entity, same financial year is there, but here also the scope is different. The scope of the company audit will be decided as per the Companies Act. The scope of tax audit will be decided as per the Income Tax Act. So since the scope is different, this assignment also is not a joint audit assignment. Take for example, there is a company X Limited. For the financial year 2022-23, they have appointed a person, Mr. A, as a company auditor. They have also appointed a person, Mr. B, as a company auditor. Can this be called as joint audit assignment? Yes. Why? Because same entity, same financial year, and also having same scope. This we can call it as a joint audit. Or take for example, there is a company X Limited. For the financial year 2022-23, they have appointed Mr. A, an individual practicing chartered accountant, as a company auditor. They have appointed a firm, PQR and Co, an audit firm, as a chartered accountant. Can this be called as joint audit? Yes, this also will be called as joint audit. More than one auditor for the same entity for the same financial year. Or take for example the company X Limited. For the financial year 2022-23, they have appointed a firm, ABC and Co, to do the company audit. They have also appointed another audit firm, PQR and Co, as a company auditor. Can this be called as joint audit assignment? Yes, this also can be called as joint audit assignment. So when more than one auditor has been appointed for the same entity, for the same financial year, and also having the same scope of work, such assignments we are going to call it as joint audit assignments. Sir, does joint audit assignments really happen? Yes, they do happen. Audit of Reliance Industries Limited is actually a joint audit. Audit of Reliance Industries Limited is actually a joint audit. So if you see the audit report here, if you see the signatures of the auditor, see two persons from two firms, two audit firms are signing. So two audit firm names will be mentioned for DTS and Associates LLP, for SRBC and Co LLP. Able to understand? So these two audit firms are appointed for conducting the audit of the same company. Yes, Reliance Industries Limited is a joint audit. So to answer your question, does joint audits really happen? Yes, they do happen. Similarly, if you see the audit report of SBI, you will be able to find in the audit report of SBI names of 16 audit firms. How many, guys? You will be able to find the name of 16 audit firms in the audit report. That means 16 auditors have been appointed for the company as a whole. So like this, yes, joint audits do really happen, but for the time being now, it is not mandatory. The standards have not, no act has made it mandatory, no standard has made it mandatory. Joint audit, just the clients on their own choice, the clients out of their own interest, they are appointing the joint auditors. It is not a compulsion. Okay. So now let me ask you one question. So why do you think companies will go for joint audit? The answer is very simple. See, no business entity will try to incur extra expenditure unless there is some value addition, unless there is some advantage. Similarly, the companies are finding some advantages in going for joint audit. Sir, what could be the advantages of joint audit? So the advantages of joint audit could be, number one, the work will be completed in less time. The work can be completed in less time. See, if one single auditor is doing the audit, it will take a lot of time. When two auditors are doing the work will be divided, work will be completed in no time. In less time, the work will be completed. Better quality of service. The client will get better quality of the service. The same work is done by multiple persons, multiple professionals. The client's quality of service will get increased. And also sharing of expertise. There will be a sharing of experience. There will be a sharing of expertise between the two audit firms whoever are getting appointed. So they can share their experiences. Mutual consultation will be there. What will be there? Mutual consultation. If one person is getting doubt, he can take the help of another person. Another auditor is getting a doubt, he can take the help of first joint auditor. Why? Because all the chartered accountants might not have expertise in all areas. Depending upon the area in which they are practicing, some chartered accountants will have expertise in taxation. Some chartered accountants will have expertise in accounts. Some chartered accountants will have expertise in audit. So if you appoint joint auditors, what will happen is they will have mutual cooperation. They will have mutual consultation. It will also promote healthy competition. There will be a healthy competition between the joint auditors because of implementing more than one auditor. So like this, industry is finding so many advantages in appointing the joint audit. So that's why the clients are voluntarily going for joint audit. But the joint audit does not come only with the advantages. The joint audit will also come with disadvantages. The joint audit doesn't come only with advantages, it is also going to come with disadvantages. Sir, what will be the disadvantages of joint audit? Very simple. When you look from the company perspective, cost will increase. Earlier, last year I have appointed single auditor, I paid 10 lakh rupees of fees. Now, if you appoint joint auditors, you can't say for each person I will pay 5 lakhs. No, that is not going to happen. So if you have appointed joint auditor, previously you paid 10 lakhs for one auditor, now you have to pay 7 and 7. So it could be 14. On an overall basis, if you appoint the joint auditor, little bit marginal increase in cost is there. So increase in the cost from the company's perspective. If you look from the auditor's perspective, reduction of fees. See, last year, if I did the audit single-handedly, I got 10 lakh rupees of audit fees. This year, they're asking me to share the work. When I share the work, what will happen? My fees also will come down. So reduction of fees. There will be problems of coordination. Joint auditors might not coordinate with each other. They might not support each other. Ultimately, the client will struggle because of this. Sometimes superiority complexes will be there. Ego complexes will be there. If you appoint auditors of different experiences as joint auditors, one auditor who is very experienced, having 30 plus years of industry experience, another auditor is a newly qualified chartered accountant. If you appoint these two kinds of joint auditors, then what will happen is there will be ego complexes, superiority complexes will build up. And when you appoint audit firms of different background, then also problems of coordination will arise. Like some audit firms will be very much risk taking. They are ready to take the risk. Some audit firms are very conservative. They don't want to take any risk. If you appoint these combination as joint auditors, ultimately the client is going to suffer. So like this, the joint audit is also coming with disadvantages. So there are advantages for joint audit also. There is disadvantages for the joint audit also, but advantages outnumber the disadvantages. That's why the clients are going for the joint audits. Okay, so we understood meaning, we understood advantages, we also understood disadvantages. Now let us talk about how the work is going to happen. How generally work will happen in case if the joint auditors are appointed. See, I told there are somewhere around 16 joint auditors are there is for SBI. See, if there are 16 joint auditors for SBI, do you think each auditor will do the audit separately and 16 times audit of the entity will happen? That is not going to happen. Similarly, Reliance Industries Limited, 2 audit firms are appointed. Does that mean each joint auditor will do the audit separately and 2 times audit of Reliance will happen? No, that is not why the joint auditors are getting appointed. So when joint auditors are appointed, generally what will happen is all the joint auditors will sit together. They will divide the work among themselves. If there are 16 joint auditors of SBI, they will not do each one audit separately. They will divide the work among themselves. All the 16 joint auditors sit together and they will divide the work among themselves. The 2 joint auditors of Reliance Industries Limited, they will sit together. They will divide the work among themselves. Sir, on what basis work will be divided among joint auditors? So there could be different bases on which work can be divided between the joint auditors. It could be on the basis of assets, liabilities, incomes and expenditure. Nothing but on the basis of items of financial statements, work can be divided. Like one joint auditor of Reliance is coming and telling, I will look after incomes and assets. Another joint auditor is telling, I will look after expenses and liabilities. So like this, on the basis of items of financial statements, the work can be divided. On the basis of geographical areas, like for example, one joint auditor of Reliance is telling, I will look into the northern part of the company. So whatever branches which are there in the northern part of India, that I will do the work. One joint auditor is telling, whatever branches are there which are in the southern part of India, that I will verify. So like this, on the basis of geographical areas, the work can be divided, or even the work can be divided on the basis of period of the financial statements. One joint auditor is telling, I will look after first 6 months. Next joint auditor is telling, I will look after the other 6 months. Or even it could be divided on the basis of identified units. If the company is into diversified businesses, multiple products are there, even the work can be divided on the basis of different products also. Like in case of Reliance, one joint auditor is telling, I will look after petroleum, retail, fashion. One joint auditor is telling, I will look after other segments. So like that, on the basis of identified businesses also, the work can be divided. So we have seen how the work will happen. Now let us talk about responsibility. Sir, what about responsibility? How to fix the responsibility in the case of joint audit? Who will be responsible? See, there will be separate responsibility also. There will be joint responsibility also. Sir, what is separate responsibility? What is joint responsibility? Simply, separate responsibility means in normal circumstances, when the work is divided among the joint auditors, each joint auditor will be held responsible only for the work which was allocated to him. In normal circumstances, when the work is divided among joint auditors, each joint auditor will be held responsible only for the work which was allocated to him. He will not be held responsible for other joint auditors' work. For example, if the joint auditors of Reliance divided the work on the basis of period of the financial statements, joint auditor A told he will look after the data from April to September. Joint auditor B has taken the responsibility for October to March. If tomorrow some fraud was identified in the month of August, which was not identified by the joint auditors, who will be held responsible? Only joint auditor A will be held responsible. So when the work is normally divided among the joint auditors, each joint auditor will be held responsible only for the work which was allocated to him. However, the standard is telling there will be certain areas in which there will be a collective responsibility. There are certain areas in the audit for which there will be collective responsibility or joint responsibility. That means the standard has listed out certain areas. In those areas, if something goes wrong, all the joint auditors will be collectively held responsible. Sir, what are that areas, sir, where there will be joint responsibility, collective responsibility of all the joint auditors? Number one, undivided work. If there is any work which is undivided, if certain work is not divided, whatever may be the reason, if certain work is not divided, then in that work, if something goes wrong, every joint auditor will be held responsible. Why? Because that is not divided. Next one, if there is any decision taken by all the joint auditors, if certain decision has been taken by all the joint auditors collectively, and if that decision has only gone wrong, who will be held responsible? All the joint auditors. Number three, matters brought to the notice of all joint auditors. If some matter has been brought to the notice of each and everybody and no one has taken action against it, then also all the joint auditors will be held responsible. Number four, whether the financial statements are prepared as per applicable financial reporting framework. Nothing but whether the disclosures, whether the disclosures required as per standards, disclosures required as per laws and regulations. Nothing but, if I put it in simple terms, whether the financial statements are prescribed in the proper format as per Schedule 3, all the explanations which are required as per Schedule 3 and accounting standards are given. Presentation part of the financial statements is also everybody's responsibility, which means if tomorrow something goes wrong in the presentation of the financial statements and if no one has commented on it, then all the joint auditors will be held responsible. So when it comes to presentation of financial statements, verification of presentation of financial statements is everybody's responsibility. And finally, whether audit report has been given as per the standards or not, this is also the collective responsibility of all the joint auditors. So when something goes wrong in any of these five matters, not just one auditor, all the five auditors will be, all the joint auditors will be collectively held responsible. What are the five matters? If there is any undivided work, if any decisions are taken by all the joint auditors, matters which are brought to the notice of all, whether financial statements are presented properly as per applicable financial reporting framework, whether the audit report has been prepared as per standards on audit. In these five matters, there will be a joint and collective responsibility. So we have seen responsibilities also. Now let us talk about opinion. Sir, what about opinion? How the opinion will be expressed? See, if there are two joint auditors of Reliance Industries Limited, do you think each auditor will give separate audit report? Generally, no. Similarly, SBI is having 16 joint auditors. Do you think will there be 16 audit reports for SBI? No. See, generally what will happen is, once the entire audit is completed, all the joint auditors will sit together, they will discuss all their observations, and they generally form one common opinion. That one common opinion will be expressed through a single audit report, which will be signed by all the joint auditors. This is what generally will happen in case of joint audit. Once the audit is completed, all the joint auditors will sit together, they will discuss all their findings, and they will form one common opinion, and on the basis of that common opinion, they will express a single report, they will express an opinion and in a single audit report which will be signed by all the joint auditors. This is what normally happen. But in some cases the problem will arise. See, when everybody agrees on the same point, then it is a good thing. But in most of the cases, what could happen is there might be a disagreement between the joint auditors. Take for example, 16 joint auditors of SBI are there, 15 are telling they will go with unmodified opinion. But one joint auditor is there, he want to show all his skill. Assume that he is a newly qualified chartered accountant, he want to display all his skill in the first audit only. He found a misstatement which is not at all material. He told that I found a misstatement in my work. All the remaining 15 joint auditors told, okay boss, you found a misstatement, but that is not material. You found a misstatement, but that is not material. Let us give unmodified. But this fellow as I've told, this fellow wants to show all the skill in the first audit only. He's telling, no, I will consider this misstatement as material. I want to give modified opinion. Now there is a difference of opinion. 15 joint auditors are telling unmodified opinion. One joint auditor is telling modified opinion. Now what should happen? Should this person go with the majority? Should this disagreeing partner, should he go with the majority? Not required. The standard says if there is any disagreement, no need to go with the majority. Then what will happen, sir? Then what will happen is these 15 people will give one audit report which contains unmodified opinion. This one person can give a separate audit report containing a modified opinion. Understood, everybody? So if there is a difference of opinion, the joint auditor so disagreeing can give a separate audit report expressing his own opinion. No need to go with the majority. The standard did not compel any joint auditor to go with the majority. He can give a separate audit report expressing his opinion. Now, which report will be circulated to shareholder? Both the reports should be circulated to the shareholder. Which one shareholder will rely? That is his headache. We have submitted both the informations, both the reports. The shareholder will go through both the reports. Whatever he feels relevant, that he will rely. The other one, he will throw it in the dustbin. Clear? So this is what regarding reporting. And one more important point there, they might ask you a true or false statement. Is a joint auditor entitled to rely on other joint auditors' work? Yes, each joint auditor is entitled to rely on other joint auditors' work, even without doing review. Without verification, a joint auditor can review on other joint auditor, can rely on other joint auditors' work, because the other person is also equally qualified like you. This statement they might pose as a question in true or false statements or MCQ. So that's why I thought of bringing it to your attention. Understood? With this, we are done with the joint audit concept also. Now we will try to revise the concept called internal audit. So we are done with out of 3 special concepts, out of 3 specific topics, we are done with 2. We are done with the concept of branch audit. We have also discussed what is joint audit. So now we are going to discuss about something called internal audit. So let us try to understand what is this concept of internal audit and for which companies it will be applicable. What does Companies Act say about it? So very simple, guys. Whatever statutory audit we have seen till now, the audit reports which auditor will give, these are all the audit reports out of statutory audit, company audit basically. And the company audit is an external audit. And the industry thought that in certain big companies or listed companies, and especially where the common person like you and me are involved, just having the external audit alone will not be enough. There is a requirement for one more robust audit mechanism, which is internal audit. The industry thought it. Sir, what are basically the differences between external audit and internal audit? Very simple, guys. In case of external audit, the person external to the organization, who is not a part of the management, who is not an employee of the company, an external person comes to the organization, verifies their books of accounts on once in a while, like once in a quarter or once in a year. He will come, verify the books of accounts, give the opinion and go away. So when it comes to external auditor, the auditor's objective is only to express the opinion. He has nothing to do with the improvement of the organization's performance or suggesting the management to how can overcome their weaknesses. All that is not a part of the external auditor's scope. So a person external to the organization comes once in a while, like once in a quarter, once in a financial year, he will come, verify the books of accounts, give the opinion and go away. He has nothing to do with the improvement of the company. He has nothing to add value to the organization. So whereas when it comes to internal audit is a person, the name itself says, who is internal to the organization, like who is like a management, who is like an employee of the company. He will also verify not just books of accounts, he will verify various other aspects of the organization also. External auditor will only, his main scope will be financial information. But when it comes to internal auditor, the scope is very wider in that one of the component is financial information. Apart from that, internal auditor also will verify operations, he will also verify production, he will also verify HR activities. So like that, the scope of internal auditor is much more wider. And the external auditor's objective will be only to express opinion. But the scope of internal auditor is to add value. Internal auditor will be appointed for value addition. That means he's not just expressing the opinion, he will try to create value for the organization. He's trying to add value for the organization. He's trying to improve the organization's overall internal controls or activities. So with that intention, internal audit concept has been introduced. So main difference, the external auditor will only express opinion, whereas the internal auditor will be appointed to add value, to create the value for the organization, to improve the overall organization. Internal auditor will be appointed. Okay, so even if you have a look at the definition also, they say that internal audit is an independent objective assurance and consulting activity which is designed to add value and improve an organization's operations. So as I was telling, internal audit is not just implemented with a view to express the opinion. The objective of internal audit is to add value, to improve the overall organization of the client. Sir, it is applicable for which entities? Is each and every company required to mandatorily appoint an internal auditor? The answer is no. Each and every company is not required to appoint the internal auditor. There is a criteria given under section 138 of the Companies Act. Only those companies which fulfill that criteria given under section 138 of the Companies Act, they are only required to make an appointment of internal auditor. Sir, what are those companies? Number one, every listed company. If the entity is listed, if the company is listed, no need to check for any criteria. For every listed company, appointment of internal auditor becomes mandatory. If the client is a public company but not yet listed, it is an unlisted public company, then if it satisfies any one of the four conditions, then they are required to mandatorily make an appointment of internal auditor. Sir, what are that four conditions? I will tell you easy things to remember. So the conditions are 25, 50, 100, 200. Twice the previous number. Start with 25, twice of it. So if the company is having outstanding deposits of 25 crores or more, if the company is having turnover of 200 crores or more, if the company is having paid up capital of 50 crores or more, if the company is having outstanding loans and borrowings from banks and financial institutions of 100 crores or more. If any one of these four conditions are satisfied, outstanding deposits of 25 crores or more, paid up capital of 50 crores or more, loans and borrowings from banks and financial institutions of 100 crores or more, and turnover of 200 crores or more, if any of these four conditions is satisfied, and if the client is public company which is not yet listed, then they are required to make a mandatory appointment of internal auditor. Understood? So this is the applicability criteria of internal audit for unlisted public company. And for some private companies also, internal audit will become applicable. To know whether for a private company internal auditor will become applicable or not, we need to check only two conditions. Out of the above four, we need to check only two conditions in the case of a private company. One is either turnover should be 200 crores or more, and loans and borrowings from banks and financial institutions should be 100 crores or more. So if these two conditions are satisfied in the case of a private company, then that company is also required to mandatorily make an appointment of internal auditor. Very, very important from this concept, applicability. They might ask you a practical question out of the applicability. So you have to remember these limits. So we have seen who has to make an appointment of internal auditor. Now we will see who is eligible to act as internal auditor, who can be appointed as an internal auditor. So the Act says, Section 138 says, the following persons can be appointed as internal auditor. Either an individual can be appointed, a partnership firm can be appointed, or even a body corporate also can be appointed as an internal auditor. If you remember from the company audit chapter, body corporate can't be appointed as a statutory auditor, but body corporate can be appointed as an internal auditor. And what should be the qualification? So a chartered accountant, whether in practice or not, a chartered accountant, whether engaged in practice or not. If you qualified chartered accountancy, that will be enough. Whether you are in practice or not, doesn't matter. You become eligible for appointment as internal auditor. A cost accountant, whether engaged in practice. Similarly, if you have completed your cost accountancy, whether you have a COP or not, doesn't matter. You can be eligible to get appointed as an internal auditor, or such other professional as may be decided by the board. So here is the interesting thing. Now in the final point, they are telling you need not be a chartered accountant, you need not be a cost accountant, you can be any other professional also, any other person, any having any other qualification as the board of directors may deem fit. Even that person also can be appointed as internal auditor, not just chartered accountant and cost accountant. Sir, and one more thing here, internal auditor may or may not be an employee. See, the statutory auditor can never be an employee of a company, but internal auditor may be an employee or may not be an employee of a company. Next, sir, who will decide objective and scope of internal audit? Oh, the act says in the case of internal audit, the objective and scope, the law doesn't want to interfere. The objective and scope has to be decided by the audit committee if it is there. If audit committee is not there, the board of directors after consultation with the internal auditor. So act doesn't want to interfere. They have given the freedom to decide it by management and auditor. So if audit committee is there, audit committee will have a discussion with the board of the audit committee will have a discussion with the internal auditor and finalize what is objective and scope. If in the company audit committee is not there, then the board of directors will sit with the internal auditors and they try to finalize what will be the objective and scope. So this is what the Companies Act simply says about internal audit. Very important is applicability. Very important is what? Applicability. Clear, everybody? Now, so now what we will do is there is one related standard of internal audit, which is SA 610. So there is one standard SA 610. Let us try to revise quickly the content of SA 610 also. Guys, when it comes to SA 610, I have already uploaded a detailed video explaining the provisions of SA 610 in the YouTube channel. I will give a description. I will give a link of that video in the description. If you want, you can watch that full video. If I have to go deep into the concepts of SA 16, it is going to easily take an hour. But since this is a revision, we can't afford that much amount of time. So I will try to give you an overview of SA 610. What the standard is trying to say, I will try to give you an overview of SA 610. If you want to understand the concept in a detailed manner, I will give the link in the description of this video. You can watch that video of SA 610 in a detailed manner so that you will get full conceptual clarity. So, but here we are going to revise it quickly. So I will spend hardly some 10 minutes of time to revise the content of SA 610. So what is SA 610 talking about? SA 610 is talking about external auditor making use of internal auditor's work. So SA 610 is talking about external auditor making use of internal auditor's work. See, whatever work external auditor will do, the same work will be done even by the internal auditor and in a much more in-depth manner. So that's why the standard has given permission as an external auditor. If you want to make use of the internal auditor's work, use it. There is no restriction. But at the same time, we have to recognize the fact that SA 16 is not making it mandatory for the external auditor to make use of internal auditor. It is not telling mandatorily that, dear external auditor, you have to compulsorily make use of the internal auditor's work. They did not say it. It is up to the choice of external auditor. If he wants, he can use it. If he doesn't want, he will not use it. There is no compulsion. If at all you have decided to use, if at all an external auditor decides to make use of the internal auditor's work while expressing the opinion, there are some precautions, there are certain procedures which are given under SA 610 that you have to follow. So one thing you have to make it very clear, the standard does not compel the external auditor to compulsorily make use of the internal auditor's work. It only told if you want to make use of it, use it. If you want to make use of it, you use it. But when you have decided to make use of internal auditor's work, there are certain precautions or there are certain procedures which you have to follow which are given under SA 610. Okay, right. So this is what the entire objective of this SA 610. Now, as per SA 610, the external auditor can make use of internal auditor's work in two ways. The external auditor can make use of the internal auditor's work in two ways, which I simply call it as type 1 usage and type 2 usage. The external auditor can make use of the internal auditor's work in two ways. One is type 1 usage, other one is type 2 usage. Type 1 usage is also called as using the work of internal audit function. Using the work of internal audit function. Type 2 usage, we call it as using the internal auditors for direct assistance. Using the work of internal auditors for direct assistance. So an external auditor can make use of the internal auditor's work in two ways. Either he can take up the route of using the work of internal audit function, or other way in which external auditor can make use of the internal auditor's work is by way of direct assistance. So first we have to understand the differences between the two. First, we have to understand the differences between the two. If you understand the differences between the type 1 usage and type 2 usage, discussion is almost over. The content is almost discussed. So let us try to understand the difference between what is this using the work of internal audit function, using the work of internal auditors for direct assistance. One simple thing, type 1 usage means in case of using the work of internal audit function, you will, as an external auditor, you will use the work which is already performed by the internal auditors. Internal auditors have already performed some work. If you want to use the work which is already performed by the internal auditors, that we call it as using the work of internal audit function. Like take for example, I will try to give you one simple example to make you understand. So there is an auditor. He is conducting audit of the client X Limited. Now, while conducting audit of the client X Limited, as a part of his audit, he is even required to check the compliances with the laws and regulations also. But external auditor is not having enough of time. What he thought is, there is internal audit team already in that client. That internal auditor have already done their internal audit and they have given their internal audit report. In that internal audit report, the internal auditor told their observations about laws and regulations. Internal auditor has already verified the compliances with the laws and regulations, and in the internal audit report they have given all their observations regarding laws and regulations. So as an external auditor, I thought instead of me verifying in a detailed manner the compliances with the laws and regulations, I thought I will use that work which is already performed by the internal auditors. That means I thought I will take the internal auditors report, open that internal auditors report, go to the respective section where they're giving comments about laws and regulations, and whatever internal auditors have their observations regarding laws and regulations, that I will use for expressing the opinion. Able to understand? So this we call it as using the work of internal audit function. That means some work has already been performed by internal auditor that I want to use it now. So that usage I call it as using the work of internal audit function, using the work which is already performed by internal auditors. Whereas direct assistance means, in the case of direct assistance, I will not use the work which is already performed by internal auditors. I will try to get the work done by the internal auditors now under my direction, supervision and review. So in the type 2, what actually happens is, let us take the same scenario. So I am an external auditor. I am conducting audit of the client X Limited. I want to comply with laws and I want to check whether the client is complying with the laws and regulations. But I don't have enough of time and resources to complete this. So what I have done is, I went to the internal auditors of the client company and I made a request to them. Sir, as an external auditor, I have to verify the compliances with the laws and regulations, but I don't have enough of time and resources. You are also auditors only. You are internal auditors. Why don't you do some work for us now? On our behalf, actually, we are required to verify the compliances with the laws and regulations. We will try to allocate the work to you. Whatever procedures we external auditors are required to perform, now you do it. We will give you direction, we will give you supervision, we will even review the work, whatever you have done. So under our direction, under our supervision, under our review, you please under my direction, under our direction, under our supervision, under our review, you perform the audit procedures now. So that is what the meaning of direct assistance. That is what the meaning of direct assistance, which means in the case of type 1 usage, using the work of internal audit function, I am using their past work, which is already performed. But in the case of direct assistance, I am not using their past work. I am getting the work done through the internal auditors now, under my direction, under my supervision, under my review. So that is what we call it as direct assistance. So in one case, we use the past work. In one case, we get the work done through the internal auditors now. So if you understood these two differences, that's all the standard discussion we can complete in just 2 minutes of time. So now what the standard says is, if you want to use type 1 work, 3 things you need to check before you decide whether to use the type 1 work or not, before you decide whether to use the work already performed by the internal auditors or not. You have to consider 3 factors and then take the decision. Sir, which 3 factors I have to consider? Number 1, whether the internal auditors are independent and objective. If I want to use the work of internal audit function, before I decide whether I can use the past work done by the internal auditors, first I need to check, are the internal auditors independent of the company? Whatever organization status given to them, does it permit the internal auditors to act in an objective manner without any bias? They did the internal audit or not? That I need to check. Number 2, I need to check, are the internal auditors competent enough? Is the internal audit function in the organization are capable? Are they qualified person? Are they not qualified person? Are they chartered accountants? Do they have enough of knowledge and skill? Do the internal audit team have enough of resources? So I will check whether the internal audit team is competent enough. Number 3, I need to check whether the internal auditors have carried out the work in a disciplined and systematic manner. I should also check whether the internal auditors have carried out their work in a systematic and disciplined manner. So I will evaluate these 3 factors. What are the 3 factors which I will evaluate before I decide to make use of type 1 work? Whether internal auditors are independent and whether they are done their work in an objective manner. Are they competent enough? Are they capable enough? Number 3, have they carried out their work in a systematic and disciplined manner? For these 3 questions, if I got positive responses, yes, internal auditors have done their work in an independent manner, they are competent enough, they have carried out their work in a systematic and disciplined manner. For all these 3 questions, if I got positive answers, then I will be comfortable in using the type 1 work. For any of the question, if I got negative response, like internal auditors are not independent, they are not capable enough, they have not followed any systematic and disciplined manner, then I will stay away from using the type 1 work. Clear? Now, if before the auditor wants to use direct assistance, that is before the auditor decides to make use of type 2 work, before he decides to allocate the work to the internal auditors now, here also few factors he will evaluate. Here he will evaluate, before I allocate the work to the internal auditors, I have to check, if I allocate the work to the internal auditors, will they be able to do the work in an independent manner or not? Number two, if before I allocate the work to the internal auditors, I have to check, are the internal auditors competent? Do the internal audit team have enough of skill and capabilities to execute the work whatever I am delegating to them now? That's all. Here two factors only have to consider. Third factor will not come here. Whether internal auditors carried out the work in a systematic and disciplined manner, that will not come here. Why it will not come here? Why? Because I am not using their past work. Now I am allocating the work to them under my direction, under my supervision, under my review. Now I am allocating. So there is no need of checking whether they have carried out the work in a systematic and disciplined manner. So in case if I want to use the work of internal auditors for direct assistance, only two factors I will check: whether they are independent, whether the internal audit team is independent, whether they will be able to carry out the work in an independent manner if I allocate it to them. Are they competent enough? Are they competent enough? If I allocate the work to them, will they be able to do it in a proper manner? Are they competent enough? That also I will evaluate. If I got for both these questions positive responses, then I will use the internal auditors for direct assistance. If I got negative response for any one of these questions, I will not use them for direct assistance. Clear, everybody? Next. Now specifically they say a few more things about type 2 usage. Regarding direct assistance, they say a few more things. They say that certain areas you should not allocate for internal auditors for direct assistance. When you want to allocate the work to internal auditors for direct assistance, be careful. Don't allocate certain areas to internal auditors. Which areas should not be allocated for direct assistance? Those areas in which there is a high risk of material misstatement. Wherever there is a high risk of material misstatement, those areas you don't try to allocate it for internal auditors. You try to do it on your own. Second area, where there is usage of significant assumptions and estimates. In whatever areas there are significant assumptions or estimates, that areas also you don't allocate it for internal auditors, that you try to do it on your own. Number three, those areas in which internal auditors are already involved. Those areas in which internal auditors are already involved in the preparation, those areas once again you don't allocate it to internal auditors. Why? Because it will lead to self-review threat. So if you see here in the SS 610, we have added it here. Yeah. See, so which kind of areas should not be allocated to internal auditors for direct assistance? Number one, wherever there is a significant judgment, wherever there is a high risk of material misstatement, wherever the work in which internal auditors have already been involved. These three areas you should not allocate for direct assistance. Other areas you can allocate it. And one more important thing here, when you want to make use of internal auditors for direct assistance, you need to obtain some written agreements. When you want to make use of internal auditors for direct assistance, you need to obtain some written agreements. You need to obtain written agreements from two people. From the management, you need to obtain written agreements. From the internal auditors also, you need to obtain written agreements. Sir, what agreement I have to obtain from the management? I have to obtain from the management a written agreement that when I am using the work of internal auditors, the management will permit me to use the work of internal auditors, and the management will not interfere when the internal auditors are working for me. So before you use internal auditors for direct assistance, you have to obtain one written agreement from the management regarding what? That management will permit the internal auditors to work for me, and they will not interfere when the internal auditors are working for me. Similarly, you need to obtain a written agreement from internal auditors also that when they are executing the work for external auditor, if they find anything confidential, they should not disclose it to the client. Some confidential matters will be there during the course of audit. That information they will not disclose it to the management. Ask a written agreement from the internal auditor that they will not disclose to the management some confidential information which external auditor will specify. And also, if at all they find any threat to their independence or objectivity, they will come and inform the external auditor. So for these two matters, you have to obtain written agreement even from internal auditor. So if you want to use internal auditors for direct assistance, use one written agreement, obtain one written agreement from management, also obtain one written agreement from internal auditor, and whatever written agreements that you are obtaining, that you have to include it as a part of your audit documentation. You have to include it as a part of your audit documentation. Clear, everybody? So this is what in brief the important content from SA 610. As I have told, this standard is very wider. If you want further detailed explanation, I will add a link in the description to SA 610 that you can revise it, that you can use it for the purpose of getting a much more in-depth understanding, much more concept. If you want to know, use that video. Clear, everybody? So this is what regarding SA 610. So we are also done with internal audit and also related standard SA 610. So now we will proceed ahead and try to revise the reporting requirements under 143. So we have certain reporting requirements under 143 subsection 1, 143 subsection 3, 143 subsection 11, and there is one specific fraud reporting requirement under 143 subsection 12. So first what we will do is, we will under 143 subsection 1, we have total 6 matters which are required to be reported. Under 143 subsection 3, there are total of 9 plus 6, 15 matters are there which are required to be reported. And under 143 subsection 11, we have something called CARO. There are total 21 matters which are required to be reported. This will come to that later. What are reporting requirements under 143 subsection 1, 3 and 11? We'll talk about it later. But first we'll try to discuss the reporting requirements under 143 subsection 12. See, 143 subsection 12 talks about in case during the course of your audit, if you came to know about fraud, to whom you have to report, what is the manner of reporting. So fraud reporting in the case of audit of companies, that is what we will try to revise here. What will be the reporting requirements of the auditor in case auditor comes across fraud during the course of audit. So entire discussion I have summarized it in the form of a simple chat. So for the purpose of reporting requirements, we will try to divide the frauds into two categories. Fraud in which amount involved is 1 crore or more, fraud in which the amount involved is less than a crore. See, whenever the amount involved in the fraud is 1 crore or more, the auditor has to report the matter to central government. So let us see what is the manner of reporting. So if the fraud is 1 crore or more, central government reporting will become applicable. Sir, but what is manner of reporting? First, whenever you came to know about the fraud, you have to report the matter to audit committee. In your client company, if audit committee is there, you have to report it to the audit committee. If audit committee is not there, then you have to report the matter to the board of directors. Very important, guys. They might ask you a MCQ question. In case auditor comes to know about the fraud, to whom he has to report? Option 1, audit committee. Option 2, board of directors. Option C, audit committee or board of directors. Option D, audit committee and board of directors. No, guys, not both, not anyone. If audit committee is there, to the audit committee only. If audit committee is not there, then to the board of directors. It is not a choice given to the auditor to decide audit committee or board of directors. If audit committee is there, to the audit committee only. If audit committee is not there, then to the board of directors. Okay, and not both also. So you have to remember this point. If audit committee is there, to the audit committee. If audit committee is not there, then to the board of directors within 2 days. If, for example, if today I came to know about the fraud, by tomorrow or day after tomorrow, I have to report the matter to audit committee or board of directors about the fraud. And after communicating the matter with audit committee or board of directors, give them 45 days of time. How much time? Give them 45 days of time to get the reply. Now, within 45 days, two things can happen. Reply will be received. Management has given the reply. Now, what you should do? Within 15 days of receiving the reply from the management, you have to report the matter to the central government. So, you communicated to audit committee or board of directors within 2 days. Gave them 45 days of time. Within that 45 days, you received reply. Now, within 15 days of receiving the reply, as an auditor, you have to report that fraud to the central government. Sir, how you have to report it? By submitting one form called ADT4. You have to submit one form, ADT4. In that form, ADT4, you have to report it to the central government. How you have to report it? And that ADT4, whatever you are sending, that should be on the letterhead of the auditor. And that letterhead should contain mobile number, email, address, all the details should be there. And that report should be signed by the auditor. He should affix his seal and also indicate the membership number. Whatever document you are sending it to central government, you should attach your stamp. You have to sign, include your membership number also. And what and all you will report to the central government? Whatever report that you have sent to audit committee or board of directors, from them what reply you have received. On that reply, if you have any remarks, that remarks, all that 3 has to be sent to the central government. What and all you will report? Original report which you sent to audit committee or board of directors. On that, what replies you have received. On that replies, if as an auditor you have any remarks, that remarks, all the 3 should be sent to central government. Sir, what if reply is not received within 45 days? Here also the act says simply report to the central government. Here also follow ADT4. Here also use a letterhead. Here also you sign it, you have a seal, you have your membership number. But what here you will send it to the central government. Since you did not receive any reply, what you simply will do is you will send whatever report originally you have sent to audit committee or board of directors along with the fact that reply has not been received. That you will report it to central government. So if reply is received, 3 things we will send. Report whatever you have sent to audit committee or board of directors. On that, what reply you have received. On that reply, if you have any remarks. In case if no reply is received, then also you have to report to central government. But what here you will report is whatever original report which you have sent to audit committee or board of directors, along with a fact. Along with that, you also have to mention a fact that we did not receive any reply. So those things you are required to report to central government. So this is what the requirements of fraud reporting in case if the amount involved is 1 crore or more. In case if the amount involved is less than a crore, then what you have to do? In case if the amount involved is less than a crore, then also you have to report the matter to audit committee if it is there. If audit committee is not there, to the board of directors. Within how many days, sir? Here also within 2 days you have to report the matter. And what and all you have to communicate? You have to communicate to the audit committee or board of directors in case if the amount is less than 1 crore. Nature of the fraud. What kind of fraud has happened? A description you have to give. Approximate amount involved. What is the approximate amount involved in the fraud? And who are the parties involved in the fraud? These 3 things, if you report the matter to audit committee or board of directors, your responsibility will come to an end. If you communicate these 3 matters, your responsibility will come to an end. Now, but once your responsibility ends, board of directors will have one more additional responsibility. Board of directors will give their board's report. No, in that board's report, board of directors should disclose certain matters. What board of directors should disclose is in their board report, nature of fraud, amount, parties involved, along with that, what remedial actions management has taken, that also need to be reported in the board of directors report. Clear? So when the amount involved in the fraud is less than 1 crore, auditor's responsibility is very simple. Communicate with audit committee or board of directors regarding 3 things. With that, your responsibility will come to an end. But in that case, board of directors will have additional responsibility. They will give board's report. In that board's report, they have to disclose 4 matters: nature of fraud, amount involved, parties involved, and what remedial actions were taken by the management after being reported by auditor. Clear? So this is what regarding 143 subsection 12. So then now we will proceed further to understand the reporting requirements under 143 subsection 1, subsection 3 and also subsection 11. Now we will try to proceed further with the reporting requirements under Companies Act, which are given under 3 sections: 143 subsection 1, subsection 3 and subsection 11. So first we will start with the reporting requirements under 143 subsection 1. There are 6 matters which are required to be reported under 143 subsection 1. So let us try to have a quick look at it. First point is regarding loans and advances made by the company. First reporting requirement under 143 subsection 1 is, as an auditor, you need to check loans and advances made by the company. Made by the company means given by the company to the others. So first point is talking about assets of the company. Your client has given loans and advances to others. If yes, if they are on the basis of security, whether they are properly secured or not, and on whatever terms and conditions those loans are made, are they prejudicial to the interest of the company or members? Are they harmful to the interest of the company or members? The terms and conditions on which the loans were given, are they harmful? Sir, when the terms and conditions will be harmful, like company has given loan without charging any interest, they have given loan without offering any without accepting any security, they have given loan without mentioning any repayment period. So these are the examples of terms which could be prejudicial to the interest of the members. So whatever it is, first point we need to verify loans and advances, whatever are there, which are given by the company, whether they are properly secured, and the terms on which they are made, are they prejudicial, are they harmful to the interest of the company or members. Second point is regarding whether transactions represented merely by book entries. Whatever transactions are there, which are there just by way of book entries. Sir, what are the examples of transactions merely by book entries? Provision entries, depreciation. These kind of entries are nothing but just book entries. So whether those transactions which are represented merely by book entries, are they prejudicial? Nothing but whatever provisions etc. are getting created by the company, the provision should be neither over reported, provision should not be under reported. Provisions, depreciation should be calculated at exact figures, no over reporting, no under reporting should happen. So that's what we need to check in the second point, whether the transactions represented merely by book entries, are they prejudicial, are they harmful? Entries like provisions, depreciation, are they harmful to the interest of the company? Third point, in case if your company is having shares, whether your client company sold the shares at a price less than purchase price. Third point, you need to comment whether your client is holding the shares of any other companies. If yes, whether your client has sold the shares at a price less than purchase price. Nothing but whether your client has sold the shares at a loss. Sometimes in the exam, they will try to confuse you. They will give market price, they will give fair value, all these things they will say. Like for example, one question they might ask you something like this. So they will say that your client company is X Limited, you are conducting audit of this company. This company is holding shares of some other companies. They have bought it at the purchase price of 100 rupees per share. Current market price is 90 rupees. But the company was able to sell it at 95 rupees. Tell whether this transaction is required to be reported under 143 subsection 1. Yes, it is required to be reported. Why? Because selling price is less than purchase price. What is the current market price? That is irrelevant. If you find that the company has sold the shares at a price less than purchase price, you are required to report it. However, this point is not applicable in case if you are conducting audit of a banking company or investment company. This reporting requirement, this particular point need not be reported in case if you are conducting audit of a banking company or investment company. In case if you are conducting audit of other than banking or investment company, then only you need to report on this matter. D point, you need to check whether loans and advances which are given by the company have been shown as deposits. Here also they are referring to loans and advances made by the company. Made by the company means given by the company. So whether your client has given any loans and advances, but instead of showing it as loans and advances, have they shown it as deposits? Find it out and report it here. Whether personal expenses have been charged to revenue. Nothing but whether the personal expenses of management and board of directors, they have been shown as a business expenses, that we need to find out and report. And the last one, where it is stated in the books and accounts of the company that any shares have been allocated for cash. That means if you came to know that your client has issued some shares for cash, if yes, whether cash has actually been received, and in case if the cash is not received, the position stated in the financial statements should be correct and not misleading. That means you should show correct position in the financial statements. Clear everyone? So these are the 6 matters. Number 1, loans and advances given by the company, whether they are properly secured and the terms and conditions are not prejudicial. Number 2, transactions represented by mere book entries are not prejudicial. Number 3, whether the company has sold the shares at a price less than purchase price. Number 4, loans and advances are shown as deposits. Number 5, personal expenses are charged to revenue. Number 6, whether shares have been allocated for cash, if yes, cash has been received or not. In case if cash is not received, position stated in the financial statement should be correct and not misleading. And one more point here, the auditor is required to report on the above 6 matters under 143 subsection 1 only if he gets negative remarks. If he gets positive responses, no need to specifically report on that matter. You need to report on any of the above 6 points only if you get negative responses. That's all. So these are the reporting requirements under 143 subsection 1. Now let us come to the reporting requirements under 143 subsection 3. Under 143 subsection 3, there are altogether some 9 plus 6, 15 reporting requirements are there. Let us see what are they. So there are very remote chances that this question will be tested in the examination. Why? Because as we know in the recent examination, the descriptive question will be tested either for 3 marks or 4 marks. So they might ask you 143 subsection 1, 6 points for 4 marks is fine, reasonable. But 143 subsection 3 is having altogether 15 points. So it will be unfair to expect, I say will ask you to write 15 points just for 4 marks or 3 marks. They will not ask you. So very remote chances of asking it, but we will try to quickly cover these points. So there are a few points which are required to be reported under 143 subsection 3. What are they? Number 1, as an auditor, did you obtain all the information and explanation which is necessary for the purposes of your audit? Whatever information you needed, whatever explanation you needed for the purpose of doing the audit, whether did you get all that information or not, that you have to comment. Number 2, whether in your opinion, proper books of accounts are maintained by your client. Did your client maintain proper books of accounts? And also, did you receive returns from branches? Number 3, in case if there is any separate branch auditor, whether the branch auditor sent his report to you and how you have dealt with that report. You are a principal auditor, one of the branches are audited by somebody else, some other branch auditor is there. If yes, whether that branch auditor has submitted his report to you and how you have dealt with that report. Number 3, whether the company, number 4, whether the company's balance sheet and P&L are in agreement with the books of accounts. Nothing but financial statements are matching with the books of accounts or not. Number 5, whether in the opinion the financial statements comply with accounting standards, whether financial statements are prepared after complying with the accounting standards or not. Next one, if you have any observation or comment on the financial transaction which have an adverse effect, which have a bad effect on the functioning of the company, you need to tell it here under this point number F. Nothing but if you find any financial transaction which is having any bad effect on the functioning of the company, that you need to report. Whether any director is disqualified from being appointed under 164 subsection 2, you need to even comment whether any of the directors of your client are disqualified. Sir, when the directors will be disqualified under 164 subsection 2, listen carefully. If any company did not file annual return or financial statements for 3 consecutive financial years with the ROC, then all the directors of that company will be disqualified for a period of 5 years. Not just in the company in which they are acting as directors, for any company they can't get appointed as director for 5 years. So when the directors will be disqualified under 164 subsection 2, when a company did not file annual return or financial statements for 3 consecutive financial years, for 3 continuous financial years. If a company is not filing annual return or financial statements with the ROC, all the directors of that company will be disqualified for a span of 5 years. So I need to check and give a comment whether any directors of my client company are disqualified under section 164 subsection 2. Then if you have any qualification, reservation or adverse remark relating to maintenance of accounts, if you find any mistake in the books of accounts, that comment you have to give it here. Next, whether the client is having adequate internal financial control, whether your client company is having proper internal financial controls and whether those internal financial controls are operating effectively or not. On this also you need to give comment. However, there is one note point here. For some companies, internal financial controls are not at all applicable. Some companies don't need to have internal financial controls only. Which companies, sir? If it is a private company which satisfies the following conditions, either it is a one-person company or small company, or a private company which is having a turnover of less than 50 crores as per audited balance sheet date, and also if they are having turnover less than 25 crores at any point of time during the financial year, then those companies are not required to implement internal financial controls at all. So what are the companies exempted from internal financial controls? One-person company, small company, and a private company having a turnover of less than 50 crores, and also borrowings from banks and financial institutions shall not exceed 25 crores at any point of time. Those companies are not required to implement internal financial controls at all. Now, if you are conducting audit of such a company which is coming under this exemption, what you will do? I will mention the same fact that my client company is not required to implement internal financial controls at all. So reporting requirement does not apply. This fact you have to mention. Now, under J point, there are actually 6 extra reporting requirements which were added over a period of time. So till now, under 143 subsection 3, we have seen point A to point I, 9 reporting requirements we have seen. Now this under clause J, there are 6 more additional matters are there which are required to be reported. Let us see what are they. Number 1, whether the company has disclosed the impact, if any, of pending litigations on its financial position. So as an auditor, I need to comment whether my client company, whatever pending litigations are going on against the company, everything has been disclosed in the financial statements or not, either as a contingent liability or provision. See, in one of the past examinations, they have asked a question, true or false statements they have asked. The auditor is required to disclose the impact of pending litigations in the auditor's report. This is what the true or false statements tested in the exam. Listen carefully once again. The auditor is required to disclose the impact of pending litigations on the financial positions in the auditor's report. Do agree with that? The answer is no. Why? Because 143 subsection 3 is not asking auditor to give disclosure. They are just asking auditor to check whether company gave the disclosure regarding pending litigations, that too in the financial statements. Hope you have paid the attention. The 143 subsection 3 not asking auditor to give disclosure regarding pending litigations. 143 subsection 3 is in fact asking auditor to check whether management gave the disclosure in the financial statements or not. That you need to check. Next one, second one, whether the company has made provision as required under any law or accounting standard for material foreseeable losses on long-term contracts. If your client company has entered into any long-term contract, and if they came to know that on that long-term contract they are going to make a loss, your client company should not wait till the completion of the contract to recognize the loss. They have to recognize it immediately. So whether your client created a provision for losses on long-term contracts or not, that you need to check and give a comment. Whether your client has made any delay in transferring the amounts which are required to be transferred to Investor Education and Protection Fund. Is your client company required to transfer any funds to IEPF? If yes, whether they have made any delay in transferring the money required to be transferred to IEPF. Fourth point, I will come to that later. Fifth and sixth point, I will explain now. Whether dividend declared or paid during the year by the company is in compliance with Section 123 of the Companies Act. Whether your client company has declared any dividend, if the client company has declared any dividend, if yes, whether that dividend has been declared as per Section 123 of the Companies Act. So Section 123 talks about this dividend in a detailed manner, whether the client company declared the dividend after complying with Section 123 of the Companies Act or not, that I need to check. And whether company in respect of financial years commencing on or after 1st April 2002, that is from 1st April 2022, the company should use such an accounting software which has the facility of audit trail. From 1/4/2022, whether the company is maintaining such an accounting software which is having the facility of audit trail or not, and whether that audit trail feature should not be tampered during the year. So whether your client is using such an accounting software which has the facility to record the audit trail which has not been tampered, that you need to comment. Guys, fourth point is there here, but it will take a lot of time for me to explain. So what I will do is, in the YouTube, I have already uploaded a detailed video explaining about this extra reporting requirements under clause J. I have done a dedicated video on YouTube to a dedicated video of some 20-30 minutes of time to make you understand this 6 reporting requirements separately under clause J. That description, that YouTube link, I will give it in the description below. You can watch it. Clear, everyone? So let me show you once here itself. So if you go to my YouTube channel, you will be able to find it there. So just a minute, I will show you. So if you go to my YouTube channel here, so in my YouTube channel, I have already uploaded a detailed video just explaining about this extra reporting requirements under 143 subsection 3 clause J. So you could see here, this is what that particular video is. In this, I have explained in a detailed manner what are that reporting requirements under 143 subsection 3 clause J specifically. Even the link to this video, I will give it in the description below. You please do watch it. So this is what the reporting requirements under 143 subsection 3. So all together, we'll come back to the marathon now. So definitely I will give the link to that video in the description below. So please do watch it. Very important. Why? Because this contain recent amendments and these points are not suitable for revision, because this one point only will take, in order to explain only this fourth point, it will take half an hour of time. So I have already put that effort and uploaded a video, and I will give it in the description below. Please go and have a look at it. So like this, under 143 subsection 3, we have total of 15 matters which are required to be reported. 9 plus 6, 15 matters are there which are required to be reported. But one more thing here, like I told you previously, the matters under 143 subsection 1 are required to be reported only if you get negative comments. But for 143 subsection 3, those 15 matters, whatever we have revised now, these 15 matters are required to be reported whether or not you have a negative comment or positive comment. Irrespective of the answers which you get, all the 15 matters are required to be compulsorily reported. But whereas 143 subsection 1 matters are required to be reported only if you get negative responses. 143 subsection 3, 9 plus 5, 16 matters, whatever we have revised now, those matters are required to be reported in all the circumstances, irrespective of your responses, whether you get positive response or you get negative responses. Clear? Now we are going to discuss the reporting requirements under 143 subsection 11, and these reporting requirements also have an other name which we call it as CARO. Company Auditors Report Order, one of the most important from the examination perspective. From the CARO itself, you can expect minimum 4 to 5 marks. You can expect it only from the CARO. So let us try to spend enough of time on revising this CARO reporting requirements. Totally, we have 21 clauses which are required to be reported under CARO. Let us have a quick look at it. Shall we do it now? Right. So my this file is getting a stuck bit. So what I will do is I will close it and reopen it once again so that it will stop getting stuck. Just give me a minute's time. Yeah. So we can resume our discussion. So we are going to revise now CARO 2020. And how many reporting requirements are there under this CARO? We have a total of 21 matters which are required to be reported under this CARO 2020. Before we can revise what are that 21 reporting requirements, first we will try to understand applicability. Listen, this applicability itself is so important that even in the recent examination also, if you observe, there is a question regarding applicability only. So such an important concept is this applicability related matter. So we will try to spend enough of time in understanding or revising this CARO applicability, and then we will spend significant amount of time on revising the reporting requirements. So first we will talk about applicability. See, CARO is actually an additional reporting requirement which is given by central government after consulting with NFRA, National Financial Reporting Authority. Now, this order is applicable for every company, including a foreign company. However, CARO is exempted for certain class of companies. CARO is exempted for certain class of companies. In case if you are conducting audit of certain companies, CARO will not become applicable for you. So what are they, sir? Number one, banking company. If you are conducting audit of a banking company, CARO doesn't apply. If you are conducting audit of an insurance company, CARO does not apply. In case if you are conducting audit of a Section 8 company, non-profit making company, CARO will not apply. It will not get applicable even for 1% company and even a small company. and it is not even applicable for private limited company. It is not applicable for private limited company if the private limited company satisfies four conditions. Not any one condition. If the private company satisfies all the four conditions, then CARO will not become applicable. Once again, I am repeating, when a private limited company satisfies any one or all four, when a private company satisfies all the four conditions given here, then auditor need not report on CARO for that company. So what are that four conditions? So if I list them out, the company, your client company should not be a subsidiary or holding of a public company. Number two, your client should not have paid up capital and reserves and surpluses exceeding 1 crore rupees as on balance sheet date. Your client should not have borrowings from banks and financial institutions exceeding 1 crore rupees at any point of time during the financial year. And your client company should have a turnover as per Schedule 3, including revenue from discontinuing operations, not exceeding 10 crores during the entire financial year. So if your client company is a private limited company and if it satisfies all these four conditions, then CARO does not become applicable. Now sometimes they have asked a practical question. They will give in the question, so and so company is there, which is a private unlimited company and which satisfies the conditions. CARO applicable or not applicable? They will give you in a question, like for example, even I have included it here for reference. So in this material is a very comprehensive material. We have put I have personally put a lot of effort in redesigning and revamping all this material. So please do consider downloading it, and how to download it I have already told you in the description below. Yes. So this is how, assume this is what somewhat a kind of examination question. CA Jayesh is appointed as auditor of KP Private Unlimited, a company registered under Companies Act with unlimited liability. For financial year 2020-21, the company had total revenue of 8 crores, which is less than 10 crores. Borrowings from banks and financial institutions is also within the limit of 86 lakhs. Paid up capital and reserves of 97 lakhs. Explain whether this audit report must include CARO. So now if you observe, look at the conditions, all the conditions are satisfied. So the company's turnover is less than 10 crore, borrowings from banks and financial institutions is less than 1 crore, and even paid up capital and reserves and surpluses balance is also less than 1 crore. Now is the CARO applicable or not applicable? CARO will be applicable. Why? Because exemption is there for a private limited company subject to fulfillment of conditions. But in the given case, the client is a private unlimited company. Since the company is a private unlimited company, no need to check for any conditions. CARO will directly become applicable. CARO will be applicable. Exemption is there only for a private limited company subject to fulfillment of conditions. For a private unlimited company, no exemption, nothing, directly CARO will become applicable. So like this also they might pose you a question. So now let us try to understand these conditions in a detailed manner and special points that need to be kept in mind while doing this calculations. Let us try to do it. Sorry. Yeah. So what is the first condition here? First condition, they are saying that your client should not be a subsidiary or holding of a public company, which means if you are conducting audit of a private limited company, that private limited company should not have a holding company, which is a public company. The private company should not have a subsidiary company, which is a public company. Condition number one, in case if your client company is a private limited company, for CARO to be not applicable, first condition is your client company should not have a holding company, which is a public company. Your client company should not have a subsidiary company, which is a public company. Condition number one. Second condition, your client paid up capital and reserves and surpluses should not exceed 1 crore. That means it shall be less than or equal to 1 crore. Even if it is 1 crore is also fine, but paid up capital and reserves and surpluses shall not exceed 1 crore even by 1 rupee also. Now some special points to be kept in mind while doing the calculation. When I say paid up capital, equity share capital also will be considered, paid up preference share capital also will be considered. And when I say reserves and surpluses, all kinds of reserves will come here. Capital reserves will come, revenue reserves will come, revaluation reserve will come, and even statutory reserves like CRR, DRR, all these things will come. So all kinds of capital is required to be considered. All kinds of reserves and surpluses are required to be considered. Sometimes there will be a debit balance in the P&L account. If there is any debit balance in the P&L account, that could be adjusted again as a credit balance for the purpose of calculation of reserves. Like for example, assume reserves and surpluses credit balance is some 80, but there is a balance in the P&L. P&L debit balance is 20. So this 20 can be adjusted again as this 80. Sometimes what will happen is, even after adjusting against the credit balance of the reserves, there will be excess debit balance left in the P&L account. If I give you one typical example, the company is having paid up capital of 120 lakh rupees. In the reserves and surpluses category, they have credit balance of the reserves, which is 20 lakh rupees, whereas they have a debit balance in the P&L of 50 lakh rupees. Now, out of this debit balance in the P&L, only 20 could be adjusted against the reserves. Even after that, 30 lakh rupees of excess debit balance is left out. Can this be adjusted against the paid up capital for the purpose of calculation? Yes, it can be adjusted. So excess debit balance in the P&L can be adjusted even against the paid up capital also for the purpose of calculation of paid up capital and reserves and surpluses. So these special things you have to keep in mind. Understood? Now coming to the third point, borrowings from banks and financial institutions shall not exceed 1 crore at any point of time during the financial year. Very important thing, at any point of time. Now there are some special points which we need to pay attention here. Borrowings from only banks and financial institutions are required to be considered. Borrowings from individual person, all these things will not be considered. Borrowings only from banks and financial institutions will be considered. When I say borrowings, they could be short-term borrowings, they could be long-term borrowings. Every borrowing should be considered. And frankly speaking, even credit card outstanding amount is also required to be considered. All kinds of balances, short-term, long-term, every kind of borrowing, or even that could be secured, unsecured, every kind of borrowing you have to consider. And you should not see the borrowings amount only as on balance sheet date. At any point of time, the borrowings shall not exceed 1 crore. At any point of time. During the year, even for one day also, if the outstanding balance of borrowings has exceeded 1 crore rupees, Karo will become applicable. Like for example, a typical example I will give you. 21-22 financial year, opening date 1/4/2021, borrowings from banks and financial institutions 70 lakh rupees. As on 30th of June 21, the company has taken additional borrowings of 40 lakh rupees. During the current year, the company repaid some borrowings to the extent of some 50 lakh rupees. As on the balance sheet date, that is as on 31st of March 2022, the closing balance is 60 lakh. Karo becomes applicable or not? Yes, it becomes applicable. Why? Because from 30th of June till 30th of September, the outstanding balance is 110 lakhs, which has exceeded 1 crore rupees. Karo becomes applicable at any point of time is very, very important. But when you are checking paid up capital and reserves and surpluses, you need not be concerned at any point of time. Paid up capital and reserves and surpluses balances shall not exceed 1 crore only as on balance sheet date. During the year, anything can happen, but paid up capital and reserves and surpluses balance shall not exceed 1 crore only as on balance sheet date. But for borrowings, at any point of time during the financial year. And few more things here. When I say borrowings, all kind of borrowings are required to be considered. This I have already told you. And one more thing here, this limit of 1 crore is for all banks and financial institutions put together. Collectively, the total borrowings from all banks and financial institutions shall not exceed 1 crore. It should not be like for each bank and financial institution 1 crore of limit. No. The cumulative balance of borrowings from all banks and financial institutions shall not exceed 1 crore. Not for individual banks separately 1 crore limit is given. Now, fourth point, the total revenue of the company shall not exceed 10 crores, should be less than or equal to 10 crore rupees. Now, while calculating this, the special points which you need to keep in mind is revenue from discontinuing operations also should be added. If in the question they are saying revenue from discontinuing operations, that shall be added for that revenue. And from this total revenue, only three things are permitted to be deducted. One is sales returns are to be deducted. If there is any trade discount, trade discount also can be reduced, and along with that, even GST or other tax components also can be reduced. But sometimes in the question, they will give you something like this. Total revenue of the company 11 crores, GST collected and accounted separately. They will ask you this also. GST collected and accounted separately 1 crore rupees. Now what you will consider for calculation? Will you consider the figure as 11 crore rupees, or will you adjust that 1 crore and consider it as 10 crore? You have to consider 11 crores only when you see the phrase GST collected and accounted separately. The meaning of this sentence, GST collected and accounted separately, is the given turnover does not include the GST component. That's what it meant. See, when the given turnover does not include GST component, why we will deduct it once again? So like this, if you find this terminology, GST collected separately, excise duty collected and accounted separately, that means that the given revenue figure is already exclusive of taxes. We should not reduce it once again. Clear? So these are the things which needs to be kept in mind while calculating total revenue. So keeping all these things in mind, we need to check for these limits in the case of a private limited company. And if all conditions are satisfied, then CARO becomes not applicable. If any of the condition is violated, then CARO becomes applicable. And one more thing, in case of holding company will prepare two sets of financial statements, standalone financial statements and consolidated financial statements. Limits will be calculated only as per standalone financial statements, not consolidated. And while conducting audit of consolidated financial statements, CARO is exempted except one clause, which is clause number 21. If you are conducting audit of consolidated financial statements, your audit report need not include the 20 clauses, only clause number 21 should be mentioned in consolidated financial statements. In case if the company is having branches, then the limits will be calculated for the company as a whole, including all the branches information. And once CARO becomes applicable for the entire company, all the principal auditor, branch auditor, everybody have to report on this 21 matters in their respective audit reports. Understood? So this is what calculations, applicability criteria. Very important, as I have told, sometimes questions will be tested from this applicability criteria itself. Now let us come to the reporting requirements. What are those 21 matters which are required to be reported? That we will try to understand. First reporting requirement is regarding property, plant and equipment. Regarding property, plant and equipment, you need to check 5 things. How many things? 5 things. Number 1, you need to check whether your client is maintaining proper records relating to fixed assets. Sorry, PPE. Whether your client is maintaining proper records relating to PPE, which should show quantitative details of PPE, situation of the PPE, nothing but location of the PPE. So whether your client is maintaining such a records, which should show me quantitative details as well as situation or location of PPE. Number 2, whether those fixed assets are physically verified by the management at reasonable intervals. Whether your client company has physically verified. They're not asking auditor to do physical verification. They're asking whether management did the physical verification of that PPE at reasonable intervals. Here at reasonable intervals means once in 3 years. For PPA physical verification, reasonable interval can be taken as once in 3 years. And on doing such physical verification, did the management find out any material discrepancy? Any differences were found out by doing that physical verification? If yes, whether they have been properly dealt with in the books of accounts, whether they have been properly adjusted in the books of accounts. So this is the second point regarding physical verification. First point is regarding maintenance of records. Second point is regarding physical verification. Number 3, we need to check titles of immovable properties. Nothing but whether your client is a true owner of the immovable properties or not, I need to check. Sir, how can I check the title of immovable properties? Simply by checking the registration documents, by checking the sale deeds. So whatever land and buildings are there in your client's balance sheet, get the registration documents of all these land and buildings. Check whether in the registration document company's name is there or not. If company's name is not there, that means in the registration document, if somebody else's name is there, then I need to report some details. What are they? Description of the property, describe about that property, what is the gross carrying value. If not in the company's name, then it is held in whose name, whether that person in whose name the property is held, is he promoter, director or employee, for what period the company is holding the asset, and the reason why it was not yet transferred in the name of the company. These reasons are required to be reported in case if the property is not in the name of the company. If it is there in the name of the company, no issue. Now, coming to the fourth point, during the year, whether your client company did any revaluation of the assets. Revaluation means restating the assets. In case if your client has done the revaluation of the assets, whether the revaluation is based on valuation done by a registered valuer. Whatever figure comes to your client's management should not be revalued. The company should go to a registered valuer, get the valuation certificate. As per that valuation certificate, revaluation should happen. So I need to check whether revaluation is based on a certificate from registered valuer. And also specify the amount of change. You need to mention how much amount of change has happened because of revaluation. Only if the change is 10% or more, in the aggregate of net carrying values of each class of property, plant and equipment. Which means you need to tell the amount of revaluation only if because of revaluation the change is 10% or more, not for individual asset, for aggregate value of entire class of assets. So what do I mean by here is, I will give you one best example to make you understand, very, very important. Assume company is having some buildings under buildings category. 3 buildings are there. Building 1, building 2, building 3. I will give you values before revaluation. I will give you values after revaluation. So before revaluation, the building 1 is having a value of 100 crore rupees. It was revalued to 115 crores. Building 2 is having a value of 50 crore rupees. It was revalued to 53 crores. Building 3 is having value of 100 crore rupees. It was revalued to 87 crore rupees. Now you tell me for which asset I need to mention the amount of revaluation. Will you say here, sir, here change is 15 crores, more than 10% before revaluation. 10% is 10 crores only. Revaluation is more than 10% here. Here only 3 crores of revaluation, less than 10%. Here 13 crores of difference of revaluation, which is also more than 10%. Will you say I will report the amount of change for building 1 and building 2? You are absolutely wrong. You are completely wrong. You are required to tell the amount of revaluation if the change is 10% or more, not for individual asset, if the change is 10% or more for the aggregate of entire class of PPE. For what? For aggregate of entire class of PPE. So what do I mean here? You need to check the value before revaluation or after revaluation for entire class of buildings, not for individual buildings. So if I do the totaling here, it will be before revaluation, entire buildings was 250 crores. After revaluation, the buildings value was somewhere around 255 crores. If I am not wrong, correct me if I am wrong with the calculations. So I guess so it is 255 crores. So there is, for the entire buildings category, there is only 5 crores of change because of revaluation, which is hardly less than 10%. Here 10% is only 25 crores, but the effect of revaluation is only 50 crores. No amount is required to be reported. Clear everybody? So fourth point is regarding revaluation, whether your client has revalued any of the property, plant and equipment. If so, whether that revaluation is on the basis of registered valuer certificate, and because of that revaluation, if the change is 10% or more, that too in the aggregate of total value of each class of property, plant and equipment, specify the amount of change also. Next, last point regarding PP, whether any proceedings have been initiated or are pending against the company for holding Binami properties. Whether any case has been filed against your company, or whether any case is already going on against the company for holding Binami property. If yes, whether the company without hiding disclosed the details of that proceedings in the financial statements or not, that I need to comment. Once again, I am telling you here also, the CARO is not asking auditor to disclose the Binami transactions. The CARO is asking auditor to check whether management disclosed the Binami transaction cases in their financial statements. I'm repeating it once again. In this case also, the CARO is not asking auditor to disclose the Binami transactions in his audit report. They are just asking the auditor to check whether company disclosed the details of Binami transactions in their financial statements or not. Clear? So this is the first reporting requirement, PPE. Regarding that, 5 points are there. Number 1 is regarding proper record maintenance. Number 2, whether physical verification done by the management. Number 3, title of the immobile properties are held in the name of the company. Number 4, whether any revaluation happened. If yes, on the basis of registered value, or if the change is 10% or more for each class of asset, mention the amount. Number 5, whether company disclosed the Binami transaction cases in their financial statements or not. That's all. This is the first point. Second point is regarding inventory. Regarding inventory, what I need to do? First, here also I need to check whether physical verification of inventory has been done by management, not auditor. They are not asking auditor to do physical verification. They are asking whether management did the physical verification of inventory at reasonable intervals. Here reasonable intervals means once in every year. For physical verification of inventory, reasonable interval means what? Once in every year. And whether the coverage and procedure of such verification is appropriate. Whatever coverage management has done, whatever procedure management has followed for doing that physical verification, is that appropriate or not? You have to give the comment. And whether any discrepancies, differences of 10% or more, here also for aggregate of each class of inventory were noticed. For every class of inventory, if you find difference of more than 10%, then you need to mention that amount, and also you have to tell whether it has been properly dealt with in the books of accounts. See, when I say classes of inventory, when it comes to inventory, there will only be 4 classes: raw material, work in progress, finished goods, stores and spares. So if there is 10% or more difference you are able to find for total of each class of inventory, then only you need to report that difference. If the change is there but less than 10% discrepancy is there for entire class of asset, then you need not report that discrepancy. Next, working capital loans. Second point is regarding, in case your client at any point of time during the year, whether your client has taken working capital loan in excess of 5 crore rupees, giving security of current assets. Second reporting requirement is applicable in case your client company has taken loans. That to which kind of loan? Working capital loan. That too for an amount exceeding 5 crores at any point of time during the financial year. And what they have given as security for this working capital loans? Current assets, mainly stock. So in case if your client has taken any working capital loan in excess of 5 crore rupees from banks or financial institutions, giving the security of current assets, then I need to check whatever quarterly stock statements which my client company is submitting it to the banker. Are they submitting genuine stock statements? That means, are those stock statements are in agreement with the books of accounts of the company, or if they are submitting wrong stock statements to the banker, that also I need to check. So this particular point is included to protect the interest of the bankers. Clear everybody? So that is what the second point is about, whether your client has taken any working capital loan, that too in excess of 5 crore rupees at any point of time during the year. If yes, they will generally submit quarterly stock statements to the banker to make the banker aware of what is the current status of the stock. As an auditor, I need to check whatever quarterly stock statements which my client company is submitting to the banker, whether they are matching with the books of accounts. That is, whether they are submitting genuine stock statements or they are submitting fake stock statements. That I need to have a look and give a comment on that. Clear everybody? So 2 reporting requirements we are done. We are left with 19 more. So let us have a look at them now also. Now we will go to point number 3. So point number 3 is talking about investments, guarantees, security, loans or advances given by the company. So this third point is regarding loans and advances which are given by the company to others. That means this is also talking about assets of the entity, the loans which your client company has given to others. So now in this also 6 points are there. Let us try to understand them. First one, you need to find out whether your client company has given loans to any of the related parties. So third sub point we are dealing in that 6 points will be there. Point number A, you need to check whether your client company has given any loans and advances or investments or guarantees to any of the related parties. If yes, we need to segregate how much amount of loan was given, aggregate amount of loan given, and balance outstanding for subsidiaries, associates and joint venture. We have to report that separately. For other than subsidiary, associates and joint ventures, that I need to mention the amount separately. Whether your client has given loan to any of the related parties, if yes, I need to divide aggregate amount of loan given during the year, balance outstanding at the end of the year, for subsidiary, associate, joint ventures separately, for other than subsidiary, associate, joint venture separately. Like for example, the company has given loans of total 100 lakh rupees. Out of that, to total 10 entities the company has given the loan. Out of that, 4 subsidiary, associate, joint ventures are there. So the company has given total loan of 100 lakhs to 10 entities. Out of the 10 entities, 4 entities are having a relationship of subsidiary, associate, joint venture. Remaining 6 are other than subsidiary, associate, joint venture. Now I need to divide out of this 100 lakh rupees of loan, how much was given to subsidiary, associate, joint venture. Assume 60 lakhs was given. How much has been given for other than subsidiary, associate, joint venture? 40 lakh. Not just that, what is the balance outstanding as on the balance sheet date? So they have given loan during the year, but during there some repayments, all that things also would have happened. I need to even report what is the balance outstanding as at the end of balance sheet date from subsidiary, associate, joint venture. Assume it is 50 lakh rupees. And what is the balance outstanding for other than subsidiary, associates, joint venture? Assume it remained the same, 40 lakh rupees. So like that, in case if my client has given loans to any of the related parties, I need to divide aggregate amount of loan given and balance outstanding for subsidiary, associate, joint ventures separately and other than subsidiaries, associates, joint ventures separately. Clear? Second point. This is the first point that I tried to summarize here. Second point, I need to check under whatever terms and conditions the loans are given, whether those terms and conditions, are they prejudicial, are they harmful to the company's interest. This point we have already covered under 143 subsection 3. They are saying you to check the same thing here also once again. Under whatever terms and conditions your client has given loans to that other parties, are those terms and conditions are genuine or are they harmful? I already gave you examples when the terms and conditions will be considered as harmful, when they will be considered harmful. So if they have been given without charging any interest, without repayment period, without any accepting of security, then they will be considered as prejudicial or harmful. Next, third point, it should not be like just your client has given the loan and ignored it. As an auditor, even I need to check whatever loans that have been given to others, whether repayment of principal and payment of interest is happening regularly on or before the due dates, whether your client, whether the third parties, whoever have taken the loan, whether they are repaying the principal and interest on or before the due dates or not, that also I need to check and give a comment. And if at all, any amount remains overdue for more than 90 days. If your client has given loan to other party and if the other party is not repaying the loan, if it has remained overdue and if it remains overdue for more than 90 days, I need to check whether management has taken reasonable steps for recovery of the principal and interest. Whether the company has taken reasonable steps for what? For recovery of principal and interest. What could be reasonable steps? Selling the security, filing a case on them, etc. Whatever it is, reasonable steps are taken by the management for recovery or not, I need to check. Then we have rescheduling or extension of the loans, which means your company has given some loan in the past and that loan has fallen due during the year. In the current year, the due date is there. When the due date is in the current year, your client should have collected the money. But instead of collecting the money of the loans which have fallen due, what your client is doing is they are either renewing it or they are extending it, or the fresh loan is given to the same party to settle the old loan. Did you find any of these transactions? Your client has given loan in the past which has fallen due in the current year, but instead of collecting the loan which has fallen due, they are either extending or renewing it. That means they are extending the due date, or for the same party they are giving a new loan. Out of that new loan, he is repaying the old loan. Nothing but indirect way of extending only. So did you find whether your client has conducted these kind of transactions? Instead of collecting the loans, they are renewing, extending, or fresh loans are given to same party. If yes, I need to report what is the total amount of such loans which are renewed, extended, or settled by fresh loans. The total amount of loans I have to report. Along with that, I need to calculate percentage with the total loans and advances. Like for example, the total loans are 100. Out of that, 40 lakh rupees of loans are in the nature of renewal, extension and fresh loans. So percentage, if you calculate, that will be 40%. That percentage also I need to calculate and report it here. Clear? However, this particular point is not applicable in case if you are conducting audit of such a company whose principal business is to give loans. Nothing but in case if you are conducting audit of banks and financial institutions, this reporting requirement does not apply. For banks, CARO itself will not be applicable. Even if you are conducting audit of any NBFC, then you are not required to report on this matter. Not just this point, even the first point also, this loans to related parties. I told you that segregation, aggregate amount and balance outstanding, that first point is also not applicable in case if you are conducting audit of such a company whose principal business is to give loans, whose main business is to give loans. That is, for banks and financial institutions, you need not report on this matter. And one more last point under this third point, whether your client has given any demand loans. Demand loans means your client is giving loan without mentioning any repayment period. So in case if you find out that your client is giving the loans without mentioning any repayment period, you need to mention in the audit report what is the total amount of such loans given without repayment period. Here also calculate the percentage, how many total loans are there, out of that how much percentage is in the form of demand loans, that calculate the percentage also. And along with that, tell how much amount has been given to promoters and related parties. Out of the total loans, how much demand loans are given to promoters and related parties, that also you need to mention. So coming to the third point, 6 sub points are there which we have seen. Number 1, in case if your client has given loan to related parties, divide between subsidiary, associate, joint venture other than subsidiary, associate, joint venture. Second point, whether the terms and conditions are prejudicial. Third point, repayment of principal and interest is happening regularly on or before due dates. Number 4, if amount is overdue for more than 90 days, reasonable steps are taken by the company for recovery of the principal and interest. Number 5, when the loan has fallen due, instead of collecting it, whether your company has renewed, extended or fresh loan given to same party. If yes, mention the total amount and also calculate the percentage. Last one, whether your client has given loan without mentioning any repayment period. This is what we call it as demand loans. If yes, mention the total amount of such demand loans. Here also calculate the percentage and report it. That's all. This is what a third reporting requirement. Now coming to the fourth one, very simple. Fourth point is also regarding loans, investments, guarantees which are given by the company. In the fourth point, they simply says that if your client has given any loan, investment or guarantee to other parties, check whether they are giving it after complying with the section 185 and 186 of the Companies Act. That's all. Fifth point, acceptance of deposits. In case if your client company has accepted deposits, whether they complied with section 73 to 76 of the Companies Act. And regarding that acceptance of deposits, if there are any directives or instructions given by RBI, whether they are complied with or not. And if there is any order of CLB, that is Company Law Board, court or tribunal regarding that deposits, whether those are complied with or not. Very simple. In case if your client has accepted any deposits, provisions of the Companies Act, RBI instructions, court order, whether all these are complied with or not, I need to check. If you find any non-compliance, report what is that non-compliance which has happened during the year. Next one. Sixth point, maintenance of cost records. Nothing but whether your company is coming under that applicability criteria given under section 148 subsection 1. If yes, whether your client is maintaining cost records or not. That's all. Whether for your client cost records are applicable. In case if cost records are applicable, whether your client is maintaining proper cost records or not, you have to comment on that. Next, seventh point, important point, which is regarding statutory dues. First of all, what is the meaning of statutory dues? Statutory dues means those amounts which are required to be paid because of the requirement of law. You are required to pay some amount because of requirements of law. Examples, income tax, GST, PF, ESI, gratuity. So these all will come under statutory dues. And regarding the statutory dues, there are some reporting requirements. And for the purpose of auditors reporting requirements, statutory dues are divided into two categories, undisputed and disputed. So what is this undisputed and disputed? Disputed dues means there is some case going on between your client company and the regulatory authority. That's why some tax amount was not paid. That is disputed. Undisputed means there is no issue, nothing, no one is challenging. So, but still your client did not pay the money. That is undisputed. So, if your client is fighting a case with the regulatory authority regarding one statutory due, that is a disputed due. If there is no case, nothing going, then that will be an undisputed statutory due. So now what are the reporting requirements relating to statutory due? What are the reporting requirements relating to, what are the reporting requirements relating to undisputed? What are the reporting requirements relating to disputed? So first we will talk about undisputed dues. When it comes to undisputed dues, I need to check whether my client company is regular in depositing all the undisputed statutory dues with the authorities. If there is no dispute lying, my client should have paid all the undisputed statutory dues regularly. Regularly means what? On or before due dates, whether my client company is depositing all the undisputed statutory dues with the regulatory authorities or not. If not, the extent of arrears outstanding, if you find some undisputed statutory dues was not paid, then I need to report extent of arrears of outstanding dues, nothing but amount of that outstanding dues as at the last day of the financial year concerned for a period of more than 6 months from the date they become payable shall be indicated by the auditor. So what they are trying to say here, is if at all any undisputed statutory due is there which is not paid to the regulatory authorities, and those statutory dues which are undisputed, which are outstanding for a period of more than 6 months as on the balance sheet date, only those amounts are required to be reported. Once again, I am repeating, not all the undisputed statutory dues outstanding shall be reported. Only those undisputed statutory dues which are outstanding for a period of more than 6 months as on the balance sheet date are only required to be reported. Let me make it simple with the help of example. Assume your client is required to pay some GST. No dispute, nothing. The due date is 31st of January 2022. But your client did not pay till balance sheet date, 31st of March 2022. The amount is 10 lakh rupees. Is this required to be reported? No. Why? Because even though amount is outstanding, it is outstanding for less than 6 months. It is hardly 2 months. Another amount is there. They are required to pay some PF amount. Amount is 20 lakh rupees. The due date is 30th of June 2021. They did not pay it till 31st of March 2022. Is this amount required to be reported? Yes. Why? Because the amount is outstanding for more than 6 months as on balance sheet date. Clear? So this is what the reporting requirements relating to undisputed. Now coming to disputed statutory dues, in case of disputed statutory dues, auditor is required to comment on two things. What is the amount involved in the dispute and the forum and the court or authority where the case is pending. what is the amount involved in the dispute, and the court, when the court or commissioner before which the case is pending. Is it pending before commissioner? Is it pending before court? Is it pending before district? Sorry, is it pending before tribunal? Is it pending before Supreme Court, High Court? That need to be mentioned. So two things regarding disputed dues: what is the amount involved in the dispute, and the forum where the case is pending. So this is what regarding statutory dues. Coming to eighth point, disclosure of undisclosed income. In this point, what they try to say here is, during the year, whether your client company has faced any income tax assessment. During the year, whether any tax assessment happened, like income tax raid or return taken up for scrutiny. So like that, whether any tax assessment happened. And as a part of the tax assessment, has your client surrendered or disclosed some previously unrecorded income? Like some income tax raid happened, and in that raid, your client has surrendered some income which he did not offer to taxation earlier. So like this, during the year, whether the client has surrendered or disclosed income as a part of tax assessments. Now as an auditor, what I need to check is, now if you are surrendering for taxation, you would not have recorded in the books also. You would have hidden that income from the books also, whatever you are surrendering now. So just surrendering before the tax authorities alone will not be enough. That unrecorded income, whether it is now recorded in the books of accounts or not, that I need to check. What they're trying to say, if as a part of tax assessment, whether any income is surrendered or disclosed to the tax authorities now, just surrendering to the tax authorities alone will not be enough. That income should have been now brought to the books of accounts also. So I need to check whether that previously unrecorded income, which is offered to taxation now, has been recorded in the current year's books or not. That I need to check here. Next, ninth point is regarding loans which are accepted by your client. Now they are talking about borrowings of your client, not the assets. Now they are speaking about liabilities of your client. So when it comes to loans accepted by the client, we need to report on a few points, like whether your client has done any default in the repayment. So has your company defaulted either in the repayment of principal or payment of interest? Now what do you mean by default, sir? Default means either you are not paying the money, or even if you pay the money beyond the due date, that also will come under default. So whether your client company has made any default in repayment of loans or borrowings. If yes, I need to report the period and the amount of default for each lender. Lender wise amount and period of default should be reported. Not the total amount of default. For each lender, how much period of default has been made, how much amount of default has been made, that needs to be reported. Next, I need to check whether my client has been declared as a willful defaulter by any bank or financial institution. Willful defaulter is a bad credit rating given to the company. So I need to check whether my client has taken any loan from the borrower, and whether any bank or financial institution classified my client's account as a willful defaulter. That I need to check and give a comment. Third one is regarding term loans, where I need to check whether my client has taken a long-term loan, but instead of using it for the purpose which was mentioned to the banker, are they using it for other purposes? So in simple terms, if I have to put it, whether your client has applied the term loans for whatever purpose they have got it, they should not have misused it. In case if they have misused the long-term loans, I need to mention what amount of loan has been used for that other purposes, and what is that other purpose for which they have used it, that I need to report. Simply, if I have to put it, for whatever purpose long-term loans are taken, whether they are used only for that purpose or not, I need to check and report. Now, fourth point is regarding short-term loans. In case if your client has taken any short-term loan, whether it is used only for short-term purposes or it has been used for long-term purposes, that I need to check and give a comment. Then, whether your client company has taken loan for meeting obligations of your subsidiary, associate, joint venture companies. Your client has taken loan, but not for meeting your client's requirement, but for meeting obligations of subsidiaries, associates, joint ventures. Then I need to report what amount of such loans are taken for meeting obligations of the subsidiary, associate, joint venture, and for what kind of transactions they have spent it, that I need to report. Clear? Next, last point under this last sub point under this point, loans against a pledge of securities or subsidiaries. That means whether your client has taken any loan, but for loan we need to offer security. No, what has been pledged with the banker is the shares which they are holding in subsidiary, associate, joint venture. So whether the company has raised any loans during the year by pledging securities which they are holding in subsidiary, associate, joint venture. Whether your client has got any loan by pledging the shares of subsidiary, associate, joint venture. If yes, give the details like what is the amount involved and how many shares are pledged, etc. And also report whether there is any default in the repayment of such loans taken on the pledge of securities held in subsidiary, associate, joint venture. That's all. So 6 points regarding loans which are taken by your client company. What are they? Whether your client has made any default in the repayment. If yes, amount and period for each lender wise. Number 2, client is declared as willful defaulter. Number 3, whether term loans are used for the set purposes. Number 4, short-term loans are used for long-term purposes. Number 5, loans are taken for meeting the obligations of subsidiary, associate, joint venture. Number 6, whether loans are taken by pledging the securities of subsidiary, associate, joint ventures. That's all. Clear? Now, coming to the 10th point. 10th point is regarding IPO or FPO. So, when it comes to IPO or FPO, they have two sub-points here. Whether your client has raised the money by way of IPO or FPO, including debt instruments. If yes, they will tell some purpose to the investors, no, for so and so purpose we are raising this IPO, FPO. As an auditor, I need to check whatever amount that has been raised from IPO or FPO, whether that amount has been used only for the set purposes. Sir, how will I come to know about the purpose, sir? You will come to know about the purpose from reading the prospectus. So I need to check whatever money that has been raised from IPO, FPO, whether it has been used only for the purposes mentioned in the prospectus. If not, I need to report what defaults have taken place, what delays have taken place, and what subsequent rectifications are done. Everything needs to be reported. Similarly, during the year, if there is any private placement or preferential allotment, see, difference between IPO and this preferential allotment is in IPO, FPO, the offer will be open for everybody. But in the private placement of shares, shares will be issued, but only for a limited group of people. So in case if your client has raised money by way of preferential allotment or private placement, I need to check whether they have complied with section 42 and 62 of the Companies Act, which contains rules regarding this preferential allotment or private placement, and whatever amount that has been raised from that private placement, whether it has been used only for the purpose for which it has been raised. If not, if they are used for other purposes, then I need to report what kind of non-compliances have taken place. Now, talking about the 11th point is regarding reporting of the frauds. So here what they say is whether any fraud by the company or on the company has been noticed or reported during the year. As an auditor, did you notice or report any fraud by the company or on the company? If yes, you need to mention nature and amount involved in the CARO. What is the nature of the fraud along with the amount needs to be reported in the CARO. Similarly, you need to comment whether any of the auditors submitted form ADT 4 during the year. We have reporting requirements under 143 subsection 12. When amount involved in the fraud is 1 crore or more, reporting to central government will happen. So I need to give a comment whether any of the auditors submitted form ADT 4 during the year. Similarly, even I need to give a comment whether as an auditor, did you receive any whistleblower complaints during the year? If any, how you have considered them. As an auditor, did you receive any whistleblower complaints and how you have dealt with them? So 3 points regarding the frauds. What are they? Number 1, whether you notice or report any fraud. If yes, nature and amount involved. Number 2, whether any of the auditors submitted form 84. Number 3, as an auditor, did you consider any whistleblower complaints taken place during the year? Next, 12th point is regarding Nidhi company. In case if you are conducting audit of a Nidhi company, you need to check 3 points. Whether net owned funds to deposits ratio is 1:20. Which means for every 1 rupee of net owned funds of Nidhi company, they can accept a maximum of 20 rupees of deposits only. If they have 1 lakh rupees of net owned funds, they can accept a maximum deposits of 20 lakh rupees only. So whether this net owned funds to deposits ratio of 1:20 is met or not, I need to check it. And whether Nidhi company is maintaining 10% unencumbered term deposits. Out of the total deposits which they have collected, 10% should be kept in a fixed deposit, that too unencumbered, without offering any security. So if the Nidhi company has collected total 100 lakh rupees of money, in that 10%, which will be 10 lakh rupees, that 10 lakh rupees should be kept in a fixed deposit, and that fixed deposit should not be offered as a security for any loan. So whether 10% has been kept in unencumbered term deposits or not, that I need to check. And finally, whether Nidhi company has made any default in repayment of principal or interest to any of the deposit holders. So 3 things I need to comment in case if my client is Nidhi company. Sir, what if my client is not a Nidhi company? I will mention the same fact. My client is not a Nidhi company. Reporting requirements under this clause will not be applicable. Next point, 13th point is regarding related party transactions. So in case if your client has entered into any related party transaction, you need to check whether those related party transactions are as per section 177 and 188 of the Companies Act. And regarding related party transaction, there are so many disclosure requirements as per accounting standards. I need to check whether all those disclosure requirements are given in the financial statements or not. That's all. Compliance with Companies Act, disclosure requirements as per accounting standards. 14th point is regarding internal audit system. I need to comment whether your client is having internal audit system which is commensurate, which is matching with the size and nature of the business. Nothing but whether your client company is having enough of internal audit team which is matching with the size of the company, that I need to comment. Along with that, as an external auditor, did you use the reports of internal auditors? That also you need to give a comment. As an external auditor, did you make use of internal auditor's report? That also you have to comment in your audit report. And finally, non-cash transactions. Whether the company has entered into any non-cash transactions with the directors. Did the company enter into any exchange of goods and services, barter transactions? So I need to check whether company has entered into any non-cash transactions with the directors and other related parties. If yes, whether the provisions of section 192 of the Companies Act are complied with or not. So section 192 will give you some rules and regulations regarding non-cash transactions with the directors or related parties. I need to check whether that section 192 has been complied with or not. Next one, NBFCs. If I am conducting audit of a non-banking financial institution, then I need to check, then I need to comment on certain points whether my client company is required to obtain registration under 45 1A of the Reserve Bank of India Act. 45 IA of the Reserve Bank of India Act. So some NBFCs are required to get necessary registration under this particular section of the RBI Act. I need to check whether my client is getting covered under that section of the RBI Act. If yes, whether they have obtained that necessary registration from the RBI or not. Second one, whether my client company is conducting any non-banking financial activities or housing finance activities without obtaining a valid certificate of registration. Did my client company carry out any non-banking housing finance or non-banking or housing finance activities without obtaining registration from RBI? That I need to check and give a comment. And also, in case if your client NBFC is enjoying a status of CIC, CIC is a status given to some NBFC subject to fulfillment of conditions. So in case if your client company is enjoying that status of CIC, core investment company, as an auditor, I need to check whether they are continuing to fulfill the criteria of a CIC. Like for example sake, if NBFC fulfills some 10 conditions, they will get the status of CIC. So if my client is enjoying that status of CIC, I need to check whether these 10 conditions are satisfied or not. Now after becoming CIC, if they fulfill some extra 5 conditions, say some extra 5 conditions are satisfied, then they will get even more advanced status, which we call it as exempted CIC or unregistered CIC. In case if my client is enjoying the status of this exempted CIC also, in addition to these 10 conditions, whether these 5 conditions are also satisfied or not, I need to check. Understood everybody? So that's what they try to say here. If I read it slowly here, whether the company is a core investment company as defined in regulations made by RBI. If yes, whether they fulfill the criteria, whether these 10 conditions are met or not. And in case if the company is exempted CIC, then whether it continue to fulfill additional criteria. If it is exempted CIC, this 10 plus 5, 15 conditions are satisfied or not, I need to give a comment. And also, as a part of your client's entire group companies, is there only one CIC or more than one CIC? That means whether your client's group companies contain more than one CIC, more than one of the group companies enjoying the status of CIC. If yes, how many number of that group companies are enjoying the status of CIC? That number of CICs also I need to mention in my report. Finally, 17th point, cash losses. Whether your client company has made cash losses in the current financial year as well as immediately preceding financial year. If yes, amount of cash losses are required to be reported. Did your client company make any cash loss? See, don't confuse cash loss with loss as per statement of P&L. Both are different. Cash losses have to be calculated from the loss as per statement of P&L, loss or profit as per statement of P&L. So you have to take the figure of profit or loss from the statement of P&L, add back all non-cash expenses, reduce all non-cash incomes. The resulting figure which you get will be called as cash loss. So find out whether your client has made any cash loss for the current year as well as last year. If yes, mention the amount of that cash losses. Next, 18th point says that whether there has been any resignation of the statutory auditors. Did any statutory auditor resign during the year? If yes, find out because of what issues, what objections, or what concerns the statutory auditors have resigned and how they are affecting your audit, that you need to give a comment. Just check whether any of the auditors resigned. If yes, find out what issues, what objections, what concerns are raised by them and how they are affecting your audit, that you need to have a comment here. And then finally, 19th point, in which they say that, I will give you summary what they say in the 19th point. In the 19th point, they ask the auditor to tell his opinion whether company is able to pay the liabilities which fall due within a period of 1 year, or is there any uncertainty existing. As an auditor, you need to tell your opinion. Is the company is having capability to pay all those liabilities which fall due within the next 1 year, or are they having uncertainty? Are they having any doubtfulness? Is there any doubtfulness regarding the company's ability to pay? That opinion I have to express. See, because of this particular point in the CARO, I need to comment on the future of the company. So but however, it is just an opinion, not a guarantee. So you should express your opinion. Is the company, so let me read this point in a detailed manner, whether the auditor is of the opinion that no material uncertainty exists as on the date of audit report, that company is capable of meeting all its liabilities existing at the date of balance sheet as and when they fall due within a period of 1 year from the balance sheet date. So whatever liabilities are there which fall due within 1 year from the balance sheet date, is the company in a position to pay all that liabilities, or is there any material uncertainty existing? That I need to comment here. And on what basis I have to give this opinion, sir? On the basis of calculating financial ratios, on the basis of analyzing expected dates of realization of financial assets and payment of financial liabilities, on the basis of information accompanying the financial statements, and even on the basis of auditors' knowledge of board of directors and management's plans for the future. So you have to consider all this. So by calculating some ratios, by analyzing the dates of realization and payment to the assets and liabilities, by using the financial statements, and by sitting with the management and discussing the plans with them, using all this information, you have to tell your opinion. Is the company in a position to pay all their liabilities as on balance sheet date, or is there any material uncertainty existing? Clear? Now 20th point is regarding CSR expenditure. Let me try to summarize this, what they try to say here. Regarding CSR expenditure, they say two things. Assume 21-22 financial year, the company is required to spend some CSR expenditure. Assume 2% of average net profits of the last 3 years. That 2% comes to 2 crore rupees. In the first point, they ask me to check if the company is not able to plan how to spend this 2 crore rupees of money within 6 months from the end of financial year, that amount is required to be transferred to the fund specified under Schedule 7. Now, what does that mean? With the help of example, we'll try to understand. Financial year 21-22, they calculated CSR expenditure, 2 crores they have to spend. Now, company is designing project. Out of this 2 crores, 50 lakhs they will give it as a donation to orphanage. Another 50 lakhs they will give it as a donation to old age home. Some 80 lakh rupees they will use it for the construction of school. A school they will construct. So this is what they have decided. Within 6 months from the end of financial year, from 31st of March 2022 till 30th of September, they are able to decide these projects. But if you observe, the total projects which they have decided is amounting to only 1.8 crores. But how much amount they have to spend? 2 crores they have to spend. So they are unable to decide. They are unable to have a project for that excess 0.2 crore rupees. That 20 lakh rupees, they are not able to decide any project. And 6 months from the end of financial year is over, but still they don't know how to spend this 20 lakh rupees. Now this 20 lakh rupees should be transferred to a fund specified under Schedule 7. Sir, examples of the funds specified under Schedule 7. So examples of the funds specified under Schedule 7 are, one is PM CARES Fund, other one is Prime Minister's National Relief Fund. So like that, so many funds are there which are given to which are prescribed under Schedule 7. You need to transfer that money to the fund. Which money? The money which you are not able to plan. 6 months over from the end of the financial year, but still you are not able to plan how to spend that. So that money you have to give it to the fund. That means you are, by transferring the fund, you are giving that money to the government. Government will take care of it, how to spend. If you are able to spend it on your own, come up with a project within 6 months. If you don't come up with a project within 6 months, transfer that money to the fund, and that fund will be utilized by the government for public welfare. So that is what the first point in respect of other than ongoing projects. That means if you don't have any project, the company should have transferred that unspent amount to a fund specified under Schedule 7. If you are not able to have any project regarding the CSR expenditure, you should transfer that money to a fund within a period of 6 months of the expiry of the financial year. Within 6 months from the end of the financial year, you should have transferred that money to the fund. Once the money goes to the fund, company will lose control over it. Government will take care of it. Now, second point is regarding a project. You have a project ready, but you did not spend it. Take for example, this example only we will take. Total 1.8 crore rupees. You have a plan ready. 20 lakhs you have transferred it to government. So out of this 1.8 crores rupees, 50 lakhs you want to give it as a donation to orphanage. The company has written a check, given it immediately. 50 lakhs they want to give it as a donation to old age home. They have written a check, given it. And finally they have 80 lakh rupees. They want to construct a school. But as we know, school construction will not happen in a day or two. It will take significant amount of time. So 80 lakh rupees, you have a project ready, but you did not spend it. You will spend it. 80 lakh rupees, you will spend it on school construction only. But it will take some time. So that money which you did not spend relating to an ongoing project, that should be transferred to a special account. Nothing but a separate bank account you have to open, and in that bank account you have to keep this money. See, when you transfer that money to the bank account, in the second case, company only will have control over it. Company only will spend it. For what purpose they will spend it? For social welfare only they will spend it. But just for segregating the normal funds with CSR funds, they are asking you to transfer this 80 lakh rupees to a separate bank account. So you have a project ready, but you did not spend the money yet. You will spend it in the future. Slowly you will spend it. But till the time you spend it, keep it in a separate bank account. But what is the first point? You don't have a project at all. Since you don't have a project at all, you have to transfer it to the fund. That means you have to give it to the government. Clear? So these two things I need to check. If I read the B point now, whether any amount remaining unspent relating to any ongoing project, pursuant to any ongoing project, that means you have a project ready, but you did not spend it. That money has to be transferred to a special account. That money has to be kept in a separate bank account. Clear? And then finally comes the 21st point. This will come only in the audit report of consolidated financial statements. Here what they simply say is, whatever company's information which is getting included in the consolidated financial statements. So as we know, consolidated financial statements includes holding company, subsidiary company, associate company, joint venture company. You need to go through individual audit reports of all these companies which are included in the consolidated financial statements. Particularly, you have to go through Caro reports of all these companies and find out in any of this company's Caro report, is there a negative remark? If yes, I need to mention in the consolidated financial statements audit report which company contains that negative remark and which paragraph contains a negative remark that I have to mention. So while conducting audit of consolidated financial statements, the auditor should go through individual audit reports of all those companies which are included in the consolidated financial statements, find out whether there is any negative remark. If yes, in the consolidated financial statements audit report, he should mention which particular company's audit report contains a negative remark and which paragraph contains a negative remark. That needs to be mentioned in the audit report of consolidated financial statements. So this is what point number 21. So whether there have been any qualification or adverse remark by the respective auditors in the Caro reports of the companies which are included in consolidated financial statements. If yes, indicate the details of the companies along with the paragraph numbers of the Caro report. Clear? So this is what 21 clauses of the Caro are. Understood everybody? And one more thing here, all these 21 matters are required to be reported whether or not you have positive responses or negative responses. In all the cases, you have to report on all the 21 matters. So we are almost done with the, not almost, we are done with the audit reporting revision.